Okay. Yes, nice. Let me share the screen just a second. Okay. Okay then, so welcome everyone. Welcome to today's session. So today we are going to discuss the RBI NewsTap, and this is the session for the RBI NewsTap for your August part 1. Okay. So today we are going to discuss the RBI notifications and the RBI press releases from August. Okay. So first let's discuss the flow, that how the sessions will be taken, in what format the sessions will be taken. So first let's discuss about the flow and how you have to study and how you have to revise. Okay. Okay. So first of all, good evening to everyone. I hope you are very excited for the session, and I hope I'm clearly audible and visible to all of you. So now, and the YouTube students also give me a thumbs up if I'm clearly audible and visible. So this is a demo session for the YouTube students. Okay. Okay, let's start with the idea regarding the flow. So how we will be studying the RBI NewsTap. So see, RBI NewsTap is one of the most difficult and complex document that you have. Okay, so RBI NewsTap consists of the RBI notifications and the RBI press releases, which are very complex and very difficult to understand. So remember that yes, the sessions will be a little technical in nature because there are so many of the technical terms that you have to understand. So I hope you have come with the mind to hear me out very carefully. So hear all these things very carefully so that you are able to understand. And yes, the sessions will be a little technical. They will be a little complex in nature, but I will try to break it down in a easier manner. Okay. Okay. So first we will be discussing the topics. After each and every article, after each and every topic, I will give you the question so that you can understand that what kind of question can come from a particular article. And then we will discuss the question. And if you are doing any mistake in the question, you will recognize that where you are making the mistake, if you are reading the questions incorrectly, or you are reading the options incorrectly, or if there is some mistake that is happening. So we will also solve that. Okay. After the discussion of the topics and questions, let's say after every 5 articles, we will go to the document or the magazine that is provided in the course, so that you have the sense of completeness. You are able to understand the articles, you are able to solve the questions, as well as you are able to understand that the document is also getting covered. The RBI NewsTap document is also getting covered side by side. So after every 5-6 articles, we will go to the document and we will just tick mark that, okay, we have understood this article, we have understood everything that is given in the document. Okay. Now, query after every slide. So do not worry about it, that if you have any question, I will take your questions after every slides, or after every 5 minutes, I can say I will take your queries. I will be seeing your queries. Okay. But yes, in middle, do not ask me about cutoff. In middle, do not ask me that the level of the questions will be difficult or easy and such and such. So the extra questions that you have, okay, that you can ask at the end of the session, the strategy related questions that you have, that you can ask at the end of the session. If you have the query related to the topic, ask that after every few slides, or ask that when the article is being done. But the extra questions, we will take it at the end of the session. Okay. Last is, let's make the session interactive. Let's not just sit idle. I will request all of you to ask your queries out, to ask your questions out. When I am asking the question, give me the answer so that I'm able to understand that how much you are able to understand and how much you are able to retain. Okay. So this is the flow that is going to be. Okay. That, do not worry about that, Gaurav. In the report sessions, the miscellaneous reports will also be discussed. Okay, so do not worry about that. Now, coming to the sessions will be conducted in English. That has been notified, that has been informed to the students that the sessions will be in English, the current affairs session. The time, I will try to take the sessions in between 2 hour 30 minute to 3 hour. The sessions, I will try to finish them in 2 hour 30 minutes, so that you have the extra 30 minutes to go through the document by yourself, also to revise by yourself also. So I will try to finish in 2 hour 30 minutes, but I cannot like say for sure, but I will try to finish it in 2 hour 30 minutes. Okay. Okay. Now, how can you revise? So go through the PDF, that, so the PPT that I am going to teach you from. So that PPT will be provided to you in the PDF format. Okay. Let me close the annotation. How do we do that? Okay. I don't know, so don't annotate everyone. Okay. Because I'm not able to see the option here to close the annotation. So just requesting you to not put your like pen on the screen. Okay. So go through the PDF. So the PPTs that I am going to teach you from, the PPT will be provided to you in the PDF format. So you can revise from that, as well as go through the document, go through the magazine ones. Okay. So go through the document and revise through that. The quiz, as well as give, like, for every document the quiz has been given to you, so do practice the quiz so that you are able to understand that how much questions you are able to answer. Okay, so this is how you can revise. You can revise, like, the short revision or the last moment revision can be done through the PDF of the PPTs. Go through the document for revision, mark the documents also. Okay, and there is also quiz. So we are going to first start from the 1st to 15th August 2025. Okay, so we are going to start from 1st to 15th August 2025 RBI NewsTap. So your RBI NewsTap document, 1st to 15th August 2025, we are starting from here. Okay, any questions before starting? Anyone? Any questions, anyone? Quiz PDF. Okay, the see in the PDF in the session itself, we will be discussing the questions, but additional quiz is also provided to you. Okay, so the quiz is additionally also provided to you. So let's start with the first article. So we are going to start with the first article. No, there is no need to make any notes. Okay, so before starting, there is no need to make any notes because this PPT itself is your notes. Okay, these are the short notes that I have brought for you. So the PPT itself will be provided to you in the PDF format. So you have your notes, short notes in the PPT format. Okay, as well as you have the document, you can mark on that document, you can highlight the document. That's it. There is no need to make the notes. Just hear me out carefully so that you are able to understand the things. Okay, just hear me out, just try to understand. That's how you will get the maximum benefit. Okay, so nothing you have to do, just sit and hear me out and give the answers of the questions that I will be asking you. So starting with the first article. So first of all, Monetary Policy Committee statement, August 2025. So Monetary Policy Committee meeting happens every 2 months, in every once every 2 months. Okay, so the last Monetary Policy Committee meeting happened in June. After that, the Monetary Policy Committee meeting happened in August. So in August, there was the Monetary Policy Committee meeting. And when the meeting concludes, after that, there is the Monetary Policy meeting statement that is released. The statement is released in the RBI website under the RBI press release section. Okay. So Monetary Policy Committee meeting statement, this was released in August 2025 when the meeting concluded. Now, this was the 56th meeting of the Monetary Policy Committee. Now, in this meeting, it was decided. So in this meeting, it was decided, okay, I have to close the annotation, just a second. Okay. How? Just a second, okay. More button, the three dots in my annotation toolbar, there is no more that is showing. Okay, let's just continue. I will request you that do not write anything on the screen, okay? Okay, then let's continue. So Monetary Policy Committee meeting that happened in August, it was the 56th meeting, okay? And in the 56th meeting, there was the decision that was taken. There was the decision that was taken that the repo rate will be kept constant. That means to maintain the policy repo rate at 5.5%. So the decision was taken to not change the repo rate. Now, what is repo rate? Anyone knows? So repo rate is the rate at which the Reserve Bank of India lends to the banks. And the banks have to provide the collateral in the form of government securities to the Reserve Bank of India. Okay, so repo rate is the rate at which the RBI lends to the banks, and banks can provide the collateral. The banks have to provide the collateral to the Reserve Bank of India. Okay, so repo rate is the rate at which the RBI is lending and the banks are borrowing from the RBI. So the Monetary Policy Committee decided to maintain the policy repo rate at 5.50%. Now, if the policy repo rate is 5.50% in the liquidity adjustment facility corridor, what is the SDF rate and what is the MSF rate? SDF rate is less than the repo rate by 0.25% and the MSF is higher than the repo rate by 0.25%. So SDF rate is, yes, very good. SDF rate is 5.25% and the MSF rate is 5.75%. Now the SDF rate, this is the deposit rate of the Reserve Bank of India. The repo rate is the lending rate of the Reserve Bank of India. At the repo rate, the RBI lends the money to the banks. So at the SDF rate, the RBI deposit the money of the banks. Okay, so at the SDF rate, the RBI is taking the deposits from the bank, and this is the rate at which the RBI is taking the deposit from the banks. The RBI do not have to provide any collateral to the banks under the SDF facility. And MSF is the facility. This is also the lending facility of the Reserve Bank of India. So once the banks have taken the loan under the repo rate and they have utilized the limit under the repo rate, because there is the bank wise limit that how much a bank can take the loan from the Reserve Bank of India under repo rate. So there is the limit on how much loan can be taken by the banks under the repo rate from the Reserve Bank of India. So once that limit has been met and the bank is in the liquidity crunch, the bank requires more money in the form of loan. So bank can take the loan from the RBI under the MSF facility. Here the rate you can see is higher than the repo rate. So the MSF rate is higher than the repo rate by 0.25%, and this is also known as the penal rate. Okay, this is also known as the penal rate. I hope this is clear. So the MPC has decided, the Monetary Policy Committee has decided to keep the repo rate at 5.5%. The SDF rate is 5.25%. MSF rate is 5.75%. Now, which rate always aligns with the MSF rate? Which rate is always equal to the MSF rate? The bank rate. The bank rate is always equal to the MSF rate. So if MSF rate is 5.75%, that means bank rate is also 5.75%. As well as Monetary Policy Committee decided to take a neutral stance, Now, what is this neutral stance? Basically, neutral stance means that the Monetary Policy Committee can, in the future meetings, can increase the repo rate, can decrease the repo rate, or can keep the repo rate constant. So this is a neutral stance. That means the Monetary Policy Committee can, in the future meetings, can increase the repo rate or decrease the repo rate or keep the repo rate constant or maintain the repo rate at the current percentage. So this is what we call neutral stance, that the Monetary Policy Committee can take the decision that the Monetary Policy Committee wants in the future. So the Monetary Policy Committee is not promising anything that we will decrease the repo rate or we will increase the repo rate. The Monetary Policy Committee is saying that we will see the future condition and we will take the decision as per that. We can increase the repo rate, we can decrease the repo rate, or we can keep it constant also. Okay, so this is the idea. No, MSF rate and bank rate is not same, they are equal. Okay, they are just equal. That is the idea. Any confusion, anyone? Any confusion anyone has? No. See, the MSF rate is the rate at which the banks can take the loan from the Reserve Bank of India. Okay, once the banks have already taken the loan till the limit under the repo rate. So if the banks have already taken the loan under the repo rate and the banks have utilized their limit under the repo rate, then the banks, and if they require more loans, if they require more funds, the banks can take the loan under the MSF rate. Okay, that is, the banks can take the loan if they are in the liquidity crunch, if they are under the liquidity shock, so they can take more loan from the Reserve Bank of India under the MSF rate once they have utilized the limit under the repo rate. Okay, so that is the idea. Now, SDF rate is the rate at which the banks deposit their money with the Reserve Bank of India. Okay, this is the idea. Any confusion now? So these are the static concepts, but I have explained you that repo rate is the rate at which the banks take the loan from the Reserve Bank of India, and the banks have to provide the collateral in the form of government securities. Once the bank utilizes the limit under the repo rate, once they have taken the maximum loan that they can take under the repo rate, and a bank want more loan because the bank is in the liquidity crunch, the bank is in the liquidity shock, then the bank can take the higher loans under the Martian standing facility. So the bank can take higher loan from the Reserve Bank of India, but the bank will have to pay the higher interest rate. So repo rate is 5.50% currently, the MSF rate is 5.75%. So the bank will have to pay the higher interest rate. Under the SDF rate, this is the rate at which banks can deposit their money with the RBI. Okay, so this is the idea. Now coming to the next point, that is this decision, the decision that has been taken to maintain the policy repo rate at 5.5%. This decision is in connivance with the objective of achieving the medium-term target of CPI inflation. So what is the target of CPI inflation? The target of CPI inflation is 4%. So we want CPI inflation to be around 4% within the range, and the range is plus minus 2%. That means we don't want inflation to go below 2%. And we don't want inflation to go above 6%. So target of inflation is 4%. We want inflation to be around 4% within the range of, so flexibility is provided that within the range of plus minus 2%, that is within the range of 2% and 6%. 2% is lower tolerance level, 6% is upper tolerance level. Okay. Okay, so this is the idea. So the decision that has been taken to keep the repo rate at 5.5%, this is in connivance with the objective of achieving the medium-term target, the objective of keeping the inflation around 4% within the range of 2% and 6%. Okay, so inflation should be within the range of 2% to 6%. So the repo rate is being kept at 5.5% with the aspect that we are meeting this objective. Okay, now next is real GDP growth. The real GDP growth, or the growth in our country. The growth in our country. Real GDP growth means real GDP is increasing. Real GDP is increasing means production is increasing in our country. Okay, so real GDP growth means the production is increasing in our country. So real GDP growth for 2025-26 is projected at 6.5%. Okay, so this is the projection that is given for the real GDP growth. It is expected by the Monetary Policy Committee that the real GDP is going to grow at 6.5% in 2025-26. The consumer price index inflation. So inflation that affects the consumers. So inflation that affects the consumers is called consumer price index inflation. So this is the inflation that affect the consumer. And this is the target of 4% plus minus 2%. This is taken in consideration of the CPI inflation. So we want, or the RBI wants, the Monetary Policy Committee wants the CPI inflation, that is the inflation that affects the consumer, to be around 4% within the range of plus minus 2%. Okay. Now the CPI inflation for the financial year 2025-26 is now projected at 3.1% from the preceding 3.7%. So basically in the June Monetary Policy Committee meeting, it was said that the CPI inflation, or the inflation that affects the consumer, will be around 3.7% in 2025-26 financial year. Okay, but now in the August Monetary Policy Committee meeting, it has been said that the consumer price index inflation for 2025-26 is expected to be around 3.1%, or is expected to be at 3.1%. So that means Monetary Policy Committee has decreased its inflation projection. That means Monetary Policy Committee is expecting lower inflation in our country. Okay. Now CPI why it has happened? Because the CPI headline inflation. So CPI inflation, that is the inflation that affects the consumer. It is also called as retail inflation. It is also called as the headline inflation. Okay, so the CPI headline inflation declined for the 8th consecutive month. The CPI inflation is declining in our country for the 8th consecutive month to a 77-month low of 2.1% in June 2025. This is lowest since January 2019. Now, the Monetary Policy Committee meeting will be held in October 2025. So before your examination, there will be a Monetary Policy Committee meeting that will be held. So the data point that will be provided in that Monetary Policy Committee meeting, that will be the most important data point that you have to remember. Okay. So the meeting that will be held in October, that will be the most important meeting. This is just for your understanding, so that when we discuss the Monetary Policy Committee statement of October 2025, you remember that what is repo rate, what is MSF rate, what is SDF rate, what is the neutral stance and such. Okay. So this is the idea. Now next, so basically the data has been given for the foreign exchange reserves. It is said that the Reserve Bank of India, first of all, Reserve Bank of India maintains the foreign exchange reserves, right? So the foreign exchange reserves, so the Reserve Bank of India is maintaining the foreign exchange reserves. So as on August 1, 2025, India's foreign exchange reserves stood at US dollar 688.9 billion, sufficient to cover more than 11 months of imports. So basically the India's foreign exchange reserves, they are at US dollar 688.9 billion as on August 1, 2025. But again, the data will be updated, so that data you can remember. But basically, RBI maintains the foreign exchange reserves. Okay. Now, the credit to deposit ratio was also given, and it was said that the credit to deposit ratio in the banking system with the banks, credit to deposit ratio, let's say the credit out of the deposits of 100, the credit is 78.9. So credit to deposit ratio for the banking system at the end of June 2025 was 78.9%. Okay. Now, the last point that you need to keep in mind is about the history of RBI repo rate, because in the previous years we have seen that the question has come from the Monetary Policy Committee from its history also. So let me be clear about the history. Then I will take the queries and I will show you the question also. Okay. So CPI headline inflation is your CPI inflation. We also call the CPI inflation as headline inflation as the retail inflation. So we can use it interchangeably. We can say CPI headline inflation, CPI inflation, headline inflation, retail inflation. Now, coming to your history. So history of RBI repo rate cuts. So first of all, in May 2022, it was decided to start increasing the repo rate. Okay. So from May 2022 till February 2023, the repo rate was continuously increased. Now, from February 2023, when the repo rate was at 6.50%, so it was decided that now we will keep the repo rate at 6.50%. So then onwards till December 2024, we can say the repo rate was kept at 6.50%. In February 2025, it was decided to decrease the repo rate, to start decreasing the repo rate. Okay. So basically, in May 2022, it was decided to increase the repo rate. Repo rate is increased. Why? Can anyone tell me that why the repo rate is increased? To control the inflation. Very good. To control the inflation. Because if the repo rate, basically, try to understand that if the repo rate is increased, the interest rate is aligned to the repo rate in the country. So if the repo rate is increasing, the interest rate will increase in the country. If the interest rate is increasing, people will take less loans. The interest rate is high, so it is expensive to take loans. So people will start taking less loans at the higher interest rate. Less loans means less money flowing to the people. Okay, less money flowing to the people. So less money supply means less demand. Okay, with less demand, the prices will be controlled, the inflation will be controlled. So repo rate is increased to control the inflation, in the country. Okay. Now this was decided. So in May 2022, to control the inflation, the repo rate was increased. Okay. Until February 2023, the repo rate was increased. From February 2025, so in February 2025, it was decided to decrease the repo rate. With less repo rate, there will be less interest rate in the economy. Less interest rate means what? Less interest rate means that the loans will become cheaper. Less interest rate means that home loan, car loan, your loans are becoming cheaper. So people will take loans, more loans. With more loans, there will be more money flowing in the economy. So there will be more demand. More demand means more production also. So more growth in the country, right? Very good. So if repo rate is decreased, interest rate will decrease, the cost of borrowing will decrease. We can take the loans at the lesser interest rate. So with more loans, there will be more demand. Okay. So this is the idea. So from February 2025, you can see that the repo rate was decreased to boost the growth in the country. In April also, the repo rate was further decreased. And in June also, the repo rate was further decreased. Okay. So this is the idea. Now coming to the question, and if there is any query anyone has, now you can tell me. So CPI headline inflation declined to 8th consecutive month. That means it is declining to a 77-month low. That means since January 2019 till June 2025, we have seen the lowest of the inflation rate in June 2025. Okay, so that is the 77-month low. That's lowest since January 2019. So since January 2019, if you see in June 2025, there is the lowest of the CPI headline inflation. Got it? Yes, Manish. Yes, year on year always means that we are comparing the current month with um, the same month of the last year. So if we are talking about June 2024 right now or June 2025 right now, so year on year growth means we are comparing it with the same month last year, June 2024. So if we are talking about May 2025 and we are saying year on year growth, so we are comparing it with May 2024. Okay. See, MSF rate is the penal rate of interest. The bank rate is the rate at which the RBI rediscounts the bill of exchange. Okay, now this is a big concept, so I'm not going to explain it completely here, but basically bank rate is the rate at which the Reserve Bank of India rediscounts the bill of exchange for the banks. So banks have the bill of exchange, that is the discounted bill of exchange. So RBI rediscounts the bill of exchange. Okay, now if MSF rate is 5.75%, the bank rate is also 5.75%. But MSF rate is the rate at which banks are taking the loan from the Reserve Bank of India under the MSF rate, under the penal rate when the banks have liquidity crunch. But the bank rate here, the MSF rate, so bank rate here is the rate at which the rediscounting of bills of exchange happens for the bank. So RBI rediscounts the bill of exchange for the banks. Okay, but the bank rate is always equal to the MSF rate. Now, in its 56th meeting, the RBI's Monetary Policy Committee decided to keep the repo rate unchanged at 5.50%. Which of the following is not correct as per this meeting? So the standing deposit facility remains at 5.25%, absolutely correct. The MSF rate and the bank rate remain at 5.75%. So MSF rate is the rate at which the banks borrow from RBI at the penal rate of interest when they have liquidity crunch and when they have utilized the limit under the repo rate. The bank rate is the rate under which the RBI rediscounts the bill of exchange of the banks. Okay, the stance of monetary policy continues to be neutral, and the CPI inflation for 2025-26 is projected at 3.1%. Real GDP growth for 2025-26 is projected at 6.5%. So this is the idea. So here answer is D. Got it? Any confusion here? Any other confusion anyone has? Shall we move to next one? the Monetary Policy Committee decides the repo rate. Okay. Neutral stance, I have told you, neutral stance means that the RBI can increase the repo rate, RBI can decrease the repo rate, RBI can keep the repo rate constant in the coming Monetary Policy Committee meeting. That is neutral stance. That the RBI can take any stance in the future, or can increase the repo rate, decrease the repo rate, or keep the repo rate constant in the coming meetings. That is the neutral stance. The RBI is not saying that I will decrease the repo rate. RBI is not saying that I will increase the repo rate, or the MPC is not saying that we will keep the repo rate at this rate only. So that is neutral stance. RBI can do, or Monetary Policy Committee can do whatever they want in the coming meeting. That is the neutral stance. They are not signifying at a particular direction. They are neutral right now. They can take any of the stance, increasing the repo rate or decreasing the repo rate. Got it? Any extra query that I will take at the end of the session. If you want to understand the difference between SDF rate and reverse repo rate, I will take this query at the end of the session, because it is not related to the current affairs right now. Okay. Yes. Ravaka, correct. Okay, let's move forward then. SDF is the rate at which the banks take the deposit. The RBI takes the deposit from the banks. Okay, so this is the deposit rate of the Reserve Bank of India. The SDF rate is the deposit rate of the Reserve Bank of India. This is the rate under which RBI takes the deposits from the bank. Like we are the customers. We go to the bank to deposit our money. Similarly, banks deposit their money with the RBI under the SDF rate. So this is the rate. This is the interest rate at which the banks are depositing their money with the RBI. Okay. Now, bank rate is the rate at which the RBI rediscounts the bill of exchange for the banks. Okay. So this is not an important rate from the current perspective. In static, you will read about the bank rate, but it is not important from the current perspective. Okay. So basically, bank rate is the rate at which RBI rediscounts the bill of exchange for the banks. Now, coming to the next news article, that is Statement on Developmental and Regulatory Policy Document. So with the Monetary Policy Committee statement, the RBI also releases the Statement on Developmental and Regulatory Policy Document. Okay, so with the Monetary Policy Committee statement, the RBI also releases the Statement on Developmental and Regulatory Policy Document. So here, this Statement on Developmental and Regulatory Policy Document has stated two things. First of all, it is stated that we are going to standardize the procedure for settlement of claims in respect of deposit accounts of deceased customer of banks. So basically, if a person dies, if let's say XYZ person is dying, now the money, the deposit that the XYZ person has done in the bank accounts, let's say the XYZ person also had a safe locker. So where the money should go? If this person dies and the person has money in the deposit account, the person has gold in the safe lockers, or has the property documents in the safe locker, or has the material in the safe locker, so now the bank should keep the money. Where should the money go? Family member, that means nominee. The money should go and the material should go to the nominee. So basically, different banks follow different procedures for transferring the money to the nominee when the person dies, or when there is the deceased customer, when the customer has died. So how the money will be transferred to the nominee, or how the material will be transferred to the nominee, there are different procedures that the different banks follow. So now the RBI is saying that we are going to standardize the procedure for settlement of claims for the transfer of money, for the transfer of material in respect of the deposit accounts of the deceased customer of banks. Okay, so if a person dies, how the money will be transferred to the nominees, how the material will be transferred to the nominees. For that, RBI is saying that we are going to have a standardized procedure. Till now, different banks were following different procedures. Okay, so this is the idea. So now, under the provisions of Banking Regulation Act 1949, nomination facilities available in respect of deposit accounts articles kept in safe custody or safe deposit lockers. This facility is intended. So nomination facility is provided so that if there is unforeseen condition happens and the person dies, so the money can be transferred to the nominee. Okay. Quick return of articles can happen, that is kept in custody, to the nominee. The material can be provided to the nominee in case the person dies. In case of the deceased customer, the material in the safe deposit lockers can be provided to the nominee. Smooth release of contents in safe deposit locker, minimization of hardship of family to the family members of the deceased. So this is the idea. That's why there is the nomination facility, so that if a person dies, if the customer dies of the bank, the material and the money can flow to the nominee easily, and there can be a smooth settlement of claims. There can be a swift settlement of claims that can happen. Now, what happens currently that the banks are required to adopt simplified procedures. So banks have to follow a simplified procedure. A simple procedure the bank has to follow to transfer the money from the deceased customer's account to the nominee. But still the banks are following different procedures. Okay, they are following simplified procedures, but there are different procedures that the banks are following. Let's say if something happens to me, I have a bank account in PNB, I have a safe deposit locker in, let's say, State Bank of India, I have a deposit account in ICICI Bank. If all the banks are following different conditions, if all the banks are following different procedures, so my nominee will have to go to each end of the bank and will have to understand the procedure that each bank is following to get the money. So that is a very hectic process, and you can understand that the person is already grieving because of the loss of the family member. And then the banks are saying that, okay, follow my procedure, provide the documents and such. So it becomes very hard for the family member or the nominee. That's why the RBI is saying that even though the banks are following simplified procedures, they are following different procedures, that is making it harder for the nominees to collect the money in a faster manner. So now the RBI has said that we are going to follow a single process, a simplified standardized procedure will be followed by all the banks. Okay. So in order to enhance the customer service standards, a decision has been taken by the Reserve Bank of India to streamline settlement procedure, to standardize this settlement procedure across the banks, standardize the documentation requirement to be submitted for claims. So standardized documents will have to be provided to all the banks for settling the claims, as well as there will be a streamlined procedure that will be followed. Any confusion here? Anyone? Get the money. So that is a very hectic. No confusion? Shall I give you a question then? Try to answer this question. And if you have any confusion in regards to the static ones, like what is SLR, SDF, what is the difference between SDF and reverse repo rate, do not worry about it. I will discuss it with you at the end of the session, but let's not forget about the flow of the session also. Okay. So here, and if you want to understand bank rate, bill discounting, that we can discuss at the end of the session. Okay. So now, which of the following measures has been announced by RBI to enhance customer service standards and settlement of claims in respect of deposit accounts? So basically, there will be harmonized claim settlement procedures to be adopted across all the banks and uniform documentation norms for claim settlement. So this is the right answer, that there will be procedure that will be harmonized, that will be standardized, as well as documentation will be made uniform. So yes, answer B is the right answer. Now coming to the next. So this was the first decision that the RBI has taken, and RBI has said that the RBI will be releasing the draft circular in this regards, so that the procedure can be notified in this regards. Okay. The next decision that was taken under the statement on developmental and regulatory policy was to introduce the auto bidding facility in RBI Retail Direct for investment and reinvestment in T-bills. First of all, tell me that what is the RBI Retail Direct scheme? What is the basic idea behind the Retail Direct scheme? What is the basic idea behind the Retail Direct scheme? Yes. So basically, the Retail Direct scheme, it was introduced by the Reserve Bank of India so RBI introduced the Retail Direct scheme so that the retail investors, they can get the access the direct access to the government securities, okay? So basically the retail investors through the retail direct scheme under the retail direct portal. So the retail investors through the retail direct scheme, they can get the direct access to the government securities in the primary market as well as in the secondary market. Now, what is the primary market? Primary market basically means RBI, on behalf of the government of India, releases the government securities or sells the government securities or issues the government securities to the investors. Okay, so this is the primary market where RBI on behalf of the government of India is issuing the government securities to the investors. Secondary market means the investors are trading the government securities that they have got among themselves. So investors are trading amongst themselves in the government securities. So this is the primary market and secondary market. Now through the retail direct scheme, the retail investors have got the direct access to the primary market and secondary market of the government securities. In the primary market, the retail investors can buy the government securities, and in the secondary market, the retail investors can buy or sell the government securities. So this is the idea of the retail investors. Okay, this is the idea of the retail direct scheme. So for the retail direct scheme, there is the retail direct portal. So portal has been provided for the retail investors. Okay. So now it is said that introduction of auto bidding facilities in RBI retail direct for investment and reinvestment in T-bills, in treasury bills. So retail direct portal, first of all, it was, my voice is breaking. Okay, no. Okay, so retail direct portal, it was launched in November 2021. Okay, so retail direct portal was launched in November 2021 under the retail direct scheme to make it easier for retail investors to participate in government securities. Okay, so basically it was, retail direct scheme was from the perspective of retail investors so that they can invest in the government securities in the primary market, in the secondary market. Okay, now open their gilt accounts. Now what is the gilt accounts? These are the accounts, yes, where the retail investors can keep their dematerialized or the government securities in the demat form. So basically you have the bank accounts to keep your money with the bank. Similarly, the retail investors, they have the gilt account or gilt accounts with the RBI. In this gilt accounts, the government securities are maintained in the demat form, in the dematerialized form. Okay, so the under the retail direct scheme, the retail investors can open their gilt accounts directly with the Reserve Bank of India so that the retail investors can have their government securities in the dematerialized form in the gilt accounts. Buy government securities in primary auction. So under the retail direct portal, or under the retail direct scheme, the retail investors can buy the government securities in the primary auctions, as well as they can buy and sell government securities in secondary market. So this is regarding the retail direct scheme. Now what has happened? So in order to enable the investors to systematically plan their investment, an auto bidding facility. So basically auto bidding facility has been provided. So if you want to do investment in the treasury bills, if you want to do the reinvestment in the treasury bills, that means you invested in 14-day treasury bills. Now you want to reinvest that money. So the 14-day has matured, the 14-day table has matured. Now you want to reinvest that money. Okay, or let's say you invested your money in 7-day treasury bill, and now that T-bill has matured in 7 days. You want to reinvest that money that was previously invested. So that is reinvestment. Okay, so basically if you want to do the investment or if you want to do the reinvestment in the treasury bills, the auto bidding can happen on your behalf. That is the auto bidding facility. So now in order to enable investors to systematically plan their investments, an auto bidding facility has been provided in the treasury bills covering both the investment and reinvestment option. This has been enabled in retail direct scheme. Okay, the new functionality help the investors to mandate automatic placement of bids. Let's say I want to, every week I want to invest 20,000 rupees in T-bills, the T-bills of 14 days. Okay, so I will put the rules that, okay, I want to invest 20,000 every month. I want to invest 20,000 rupees every month in the T-bills and the T-bills that have the maturity of 14 days. So I have put the rules and now the auto bidding will happen. It is like systematic investment plan, SIP. Like you do in the case of SIP now, you put the simple rules that 10,000 rupees every month on the monthly basis in this particular mutual fund. Similarly, here I am putting the rules that 20,000 rupees in the T-bills of the maturity of 14 days on monthly basis. So the rules has to be set by you, and once you have set the rules, auto bidding will happen. So the new functionality helps investors to mandate automatic placement of bids in the primary auctions of T-bills. The bids will be placed in the auction, and the minimum size of the bid should be rupees 10,000 in multiples of rupees 10,000 thereafter. So this is the idea. So facility allow investors to set investment preference, the T-bill tenure, that is 7 days, 14 days and such. Bid amount, I have given 20,000. Bidding frequency, once a month and such. Whether you want to reinvest the maturity proceeds. So once the 14-day T-bill matures, so do you want to reinvest that money? Yes, I want to reinvest the money. So these rules you have to set, and once the rules have been set, so auto bid rules have been created, and now the auto bidding will happen. This is the idea of the auto bidding facility. Any confusion? How will auto bidding works? That is as per the portal, how the RBI retail direct portal works. On the basis of certain coding, I guess, you just have to put in rules, how the SIP works on the basis of some coding, right? Tenure means timeline. Tenure means timeline. So 14-day tenure means this is the 14-day of the T-bills. So the T-bill will mature after 14 days, okay? Or 7-day T-bill. So the T-bill will mature after 7 days. So that is a tenure. Like you have a tenure for your loan now. So that is a timeline kind of thing. You have taken loan for 1 year. So the tenure is 1 year. You have taken loan for 3 months. The tenure is 3 months, okay? So yes, under the new auto bidding facility in RBI Retail Direct for treasury bills, what is the minimum investment amount? So it is 10,000 and multiples of 10,000. Yes, tenure is period. Yes. Difference between stocks and T-bill. T-bill is a government security. Okay, it is a government security through which the government is raising the funds. Stock or share, it is for the company through which the company is selling its shares. That means company is selling a part of its ownership. Okay, got it? Now coming to the next one. Yes, T-bill is a debt instrument of the government through which the government is raising the fund. So T-bill is the debt instrument of the government through which the government is raising the funds, and the stock or shares, they are the equity or they are the ownership that the company is selling. Company is selling 10% of its ownership of or 20% of its ownership and such. Okay. Now coming to the in principle approval to AU Small Finance Bank. So basically RBI Reserve Bank has decided to provide in principle approval to AU Small Finance Bank Limited for transitioning from Small Finance Bank to Universal Bank. So basically the Small Finance Bank, the AU Small Finance Bank has got the in principle approval from the Reserve Bank of India. In principle approval means for the time being. RBI will see that this small finance bank is able to work properly as a universal bank or not, then the final approval will be given. So in principle approval always means that for the time being, the approval is given. Okay. For the time being, for the timeline, like let's say for 1 year and such, the approval is given. The RBI will keep an eye on this bank. So AU Small Finance Bank has got in principle approval to work as a universal bank or to transition into the universal bank. So this is not the final approval. This is for the time being. This is the in principle approval that has been given. Now there are some criteria that have been followed. There are some criteria that have to be followed. Okay, for the small finance bank to be transition into the universal bank. Small finance bank, they are the small finance bank. That means they can provide the small loans, okay, to certain areas. Universal banks, they are the big banks. They can provide the retail banking facilities. Let's say you want to deposit, you want to take the loan. They can provide wholesale banking facilities. Wholesale banking facilities means that, let's say the company, EduTap, wants to open the employee accounts of 100 employees, and from the EduTap's account the money has to be transferred to all these employee accounts. So this is wholesale banking, when the corporate level banking, like when the facility is provided to corporates or companies. That is the idea. Yes, like SBI, PNB, Axis Bank, they provide these kind of facilities. So small finance banks, they are the banks that provide the small loans. The universal banks, they can provide the retail banking facility as well as wholesale banking facility, as well as other facilities also they can provide. Now, the EU Small Finance Bank has got the in-principle approval to transition from a small finance bank to a universal bank. What criteria has to be followed for transitioning, for voluntary transition from a small finance bank to universal bank? So let's understand the criteria. First of all, scheduled status with a satisfactory track record of performance for a minimum period of 5 years. Scheduled status means what? Anyone can tell me. What is the meaning of scheduled status? Scheduled status basically means, very good, that the bank should be under the second schedule of the RBI Act of 1934. Okay. So the small finance bank, it should have the scheduled status. That means it should be under the second schedule of the RBI Act of 1934. So the small finance bank should have a scheduled status with a satisfactory track record of performance for a minimum period of 5 years. That means it should be a scheduled bank. It should be a scheduled bank for a minimum period of 5 years. The shares of the bank should have been listed on a recognized stock exchange, NSE, BSE, National Stock Exchange, Bombay Stock Exchange, having a minimum net worth of 1,000 crore as at the end of the previous quarter, that was audited previous quarter, meeting the prescribed CRAR, so capital adequacy. The scheduled finance bank, the small finance bank should have enough of the capital adequacy. The bank should have enough adequate capital. Okay, having a net profit in the last 2 financial years. So in the last 2 financial years, there should be net profit that the small finance bank should be earning. Then it can transition into the universal bank. Having the gross non-performing asset. So total non-performing asset should be less than or equal to 3%, as well as net non-performing asset should be less than or equal to 1%. Okay, so gross non-performing asset means the bad loans, that are the borrowers, they are not returning the principal amount, they are not paying the interest also. So these are the non-performing asset, these are the bad loans that are not being paid. So the gross non-performing asset should be less than or equal to 3%, as well as the net non-performing asset should be less than or equal to 1%. That is the idea. So these are the criteria that have to be met. Any confusion? For different banks, it is different. It is around 15%. Okay. The Reserve Bank has decided bad loan means for the loan, the principal or the interest is not being paid. Bad loan means the loan for which the interest amount and the principal amount is not being paid. That means the borrower has stopped paying for the loan. So that is a bad loan, bad debt. Yes. Capital to risk weighted asset ratio, it is the capital adequacy ratio. That means the bank should maintain adequate capital with themselves so that the banks are able to handle the risk or the distress kind of situation. So this is a capital to risk weighted asset ratio. So basically the formula of capital to risk weighted asset ratio, the capital to risk weighted asset ratio is equal to the capital that bank should be maintaining divided by the risk weighted assets. So asset of the bank is what? What is the asset of the bank? The loans. The loans are the asset of the bank. Okay. What is the risk weight? All the loans have some risk, right? All the loans have some risk. So certain loans, the central government loans, what kind of risk do they have? Do they have any risk? No, they don't have any risk. So the risk weight will be 0%. The corporates, they have risk, right? Now some corporates, they are big corporates, they have the asset, they have the paying capacity, they have the capacity to return the loans, as well as they have very high credit rating. So these corporates, let's say they have the risk weight of 20%. Now there are certain corporates that have less credit rating. So they have the risk weight of 80%. So different loans have different risk weight. So risk weighted asset means the asset on the basis of the risk weight. Okay. Let's say the risk weighted asset is 1 lakh. Now the CRAR is 15%. So how much of the capital has to be maintained? You are doing quant, right? How much of the capital has to be maintained? 15K. Very good. Yes. So basically, capital to risk weighted asset ratio is equal to the capital that the banks have to maintain with themselves against the risk weighted asset, against the loans that have the risk weight. The different loans can have different risk weight. Some loans, like the loans given to central government, have 0% risk weight, as they do not have any risk. Central government has to pay back. The corporate loans, they have different kind of risk, 20%, 30%, 40%, the risk weight on the basis of credit rating and such. So if the risk weighted asset is 1 lakh, the CRAR is 15%. That means 15K, 15,000 of the capital has to be maintained against the risk weighted asset of 1 lakh. Any confusion here? So this is the capital that the bank, CRAR is the capital, the adequate capital that the banks have to maintain against the risk weighted asset. Anshu, for this, yes, the CRAR for the small finance bank, for the like scheduled commercial banks, it is different. It is 9%. Okay, for the scheduled commercial banks. For the small finance bank, it is around 15%. Okay. For the NBFCs also, it is different. So for a category of banks, there are different CRAR. Got it? Okay. Now the Reserve Bank has decided to grant in principle capital to be maintained. Yes, the banks, they can maintain more capital also. Okay. So there are some additional. So these are the basic eligibility criteria. The scheduled status with a satisfactory track record of a performance for a minimum of 5 years. So the bank should be, small finance bank should be performing for 5 years in a satisfactory manner and should have the scheduled status, should be under the second schedule of RBI Act of 1935, sorry. Shares of the bank should have been listed on the recognized stock exchange, minimum net worth of 1,000 crores, prescribed CRAR requirement of the small finance bank, net profit in the last 2 financial years, and gross non-performing asset of less than or equal to 3%, net non-performing asset of less than or equal to 1% in the last 2 financial years. Schedule status means that the small finance bank should be in the second schedule list of RBI Act of 1935. No, Gayatri. Now, there is next is following condition shall be applicable with regard to shareholding pattern. So these are additional conditions that are imposed. Basic idea you require, I will provide you the basic idea. Okay. So there is no mandatory requirement for an eligible small finance bank to have identified promoter. Promoter are basically the owners that have established the small finance bank. So even if a small finance bank do not have an identified or a big promoter, that is also fine. That is not a problem. So there is no mandatory requirement. If the small finance bank want to transition into the universal bank, there is no mandatory requirement for the identified promoter, for a big promoter, no requirement. However, the existing promoters, let's say there are various small promoters, okay, of an eligible small finance bank that wants to transition into universal bank. So these existing promoters, they shall continue as the promoters on transition to universal bank. So first of all, there is no mandatory requirement for an identified promoter of a small finance bank. Even if the small finance bank do not have the promoter, that is fine, that is good. It's good to go to become the universal bank. But if the small finance bank do have a promoters, or the small finance bank do have the promoters, they need to be the promoters of the universal bank also once the small finance bank transition into universal bank. Okay. Addition of new promoters or change in promoters shall not be permitted for an eligible small finance bank while transitioning into universal bank. So once the small finance bank is transitioning into the universal bank, there will be no change in promoters that will be allowed. There will be no additional promoters that will be allowed. There shall be no new mandatory lock-in period. So sometimes the RBI mandate that the promoters, that are the owners basically in the small finance bank that have established the small finance bank, they need to have the lock-in period. That means for, let's say, 5 years, they need to keep their shares in the small finance bank. They cannot dilute or they cannot sell their shares. Okay. So if there is the mandatory lock-in period stated for the small finance bank, for the promoters to maintain the minimum shareholding, there will be no additional lock-in period that will be notified. So basically, if there are the promoters, let's say there are the promoters for the small finance bank, the RBI has notified the promoters to maintain a minimum shareholding in the small finance bank, to maintain minimum shares in the small finance bank for a minimum period of 5 years. So this is the lock-in period in which the promoters have to maintain the minimum shareholding for the given timeline. Now, if the small finance bank is transitioning into the universal bank, there will be no additional timeline or there will be no additional lock-in period that will be notified. Whatever previous lock-in period was there, that will continue even when the small finance bank converts into universal bank. Got it? Promoters are the ones that have established the bank. So promoters have established the bank. They are the owners, kind of. Okay. Got it? Now, next is there shall be no change to the promoter shareholding. Now, again, next thing is, so the RBI has said that there will be no change in the mandatory lock-in period for the minimum shareholding. Now, it has been said that if the dilution plan has been provided, and that has been approved by RBI. So basically the promoters, they asked RBI, can we dilute our shares? That means, can we reduce the shareholding that we have in the small finance bank? So let's say that there are two owners that establish the small finance bank. They have 100% of shareholding of the small finance bank because they established the small finance bank. Person A and person B, they established the small finance bank. They have 100% of shareholding in the small finance bank. Now they want to or they have, let's say they have sold 10% in the market, or they have sold 30% in the stock exchanges. So they have 70% of the shareholding in the small finance bank. Now they are saying that we further want to reduce our shareholding. And they presented the dilution plan to the Reserve Bank of India. RBI approved that, okay, you can dilute your shareholding, you can decrease your shareholding from 70% to 50%. So you can decrease your shareholding by 20%. RBI approved this dilution plan. So if RBI has already approved the dilution plan, so even if the small finance bank is transitioning into the universal bank, this dilution plan will continue. Okay. So basically, there will be no changes. If the RBI has approved something, that is good to go. So there shall be no change to the promoter shareholding dilution plan already approved by the Reserve Bank. There shall be no new mandatory lock-in requirement of minimum shareholding for existing promoters in the transition universal bank. The eligible small finance banks that want to transition into universal bank, they need to have diversified loan portfolio. That means their loan portfolio, the loan that they have provided, should be diversified, should not be concentrated to certain sectors. This is the idea. Any confusion here? Promoters, I have already told you who are the promoters, the ones that have established the bank. Okay. Is identified promoter required? No compulsion is there, that you can see. Next, coming to the question, try to answer this question. And is it clear to the YouTube students also? What are sorry if I'm pronouncing your name wrong, Sarkar. So if which term, if there is any term that you are facing problem in, that you can ask. Is it clear? Yes, nice. Okay. Diversified loan portfolio means that the small finance bank is giving loan to the MSMEs, micro, small, and medium enterprises, to the agriculture sector, to the farmers, to the allied sector, to the small businesses, and in the different industrial areas, to the households and such and such. So that is diversified. Loan portfolio is diversified. Different sectors are involved. The loan is given to different segments. Okay. The loan is not concentrated to only farmers. The loan is not concentrated only to the micro enterprises. The loan should not be concentrated. It should be diversified, should be given to different segments. Got it? So, no, there is no mandatory lock-in period. Okay. Now, the small finance bank must have a minimum net worth of 1,000 crores. Correct. An eligible small finance bank must have been profitable in each of the last 2 financial years. There should be net profits. That should be there. There is no mandatory requirement for an eligible small finance bank to have an identified promoter while transitioning. Correct. Eligible small finance bank with diversified loan portfolios will be preferred. So the more diversified loan portfolio you have, that means you are reaching out to more type of customers. So that is good. So this is also correct. So first, third, and fourth. So E is the right answer here. Yes. So E is the right answer here. The first, third, and fourth, they are correct. The second one is wrong. Yes, Balabi, correct. They just have to meet the basic requirements that has been notified here. Okay. Coming to the next one. So Reserve Bank of India has the authority to approve schemes of amalgamation. So basically, if a cooperative banks want to amalgamate with the another cooperative bank, so that will be allowed by the RBI. Approval has to be taken from RBI. So recently RBI has approved the amalgamation of New India Cooperative Bank Limited with Saraswat Cooperative Bank Limited. So basically amalgamation here means that all branches of the New India Cooperative Bank will operate as the branches of the Saraswat Cooperative Bank. So the New India Cooperative Bank has been amalgamated, has been merged or taken over by the Saraswat Cooperative Bank. So there is amalgamation that has happened. They both have become one. Okay. Any confusion here? So basically, the New India Cooperative Bank Limited branches will operate as branches of Saraswat Cooperative Bank Limited. Answer this. Yes. So recently, amalgamation merger kind of thing. Okay. Recently, the Reserve Bank of India has approved the amalgamation of the New India Cooperative Bank Limited with the Saraswat Cooperative Bank Limited. Now, next is international trade settlement in Indian rupees. Now, first of all, special rupee Vostro account. You have to understand this. If you understand this, then the topic is nothing. Okay. Till now, any confusion anyone is facing? I have not explained it till now. So I will explain it. See, we are studying current affairs. Okay. So in the current affairs, whatever is required that I will provide you. Now, cooperative banks, what are they? What are the cooperative banks? So that much in depth, like questions, this kind of question will not come. Okay. So cooperative banks, if you want to have the basic understanding, you can see it in static. Otherwise, just follow whatever I am teaching in the current affairs part. Okay. Okay. Nice. So spatial rupee Vostro account. First of all, try to understand this, that the RBI said that we want to use the Indian rupees for the international trade. How many of you remember the sanctions that were imposed on Russia? So it was said that for trade with Russia, the dollar should not be used. Okay. So there were various sanctions that were being imposed on Russia because of Russia-Ukraine war. Very good. So because of the Russia-Ukraine war, there were many sanctions that were being imposed on Russia. At the same time, India wanted the INR to be used, the Indian rupees to be used for the trade. that happens between the countries rather than using dollars. Because what happens that we demand dollars, right? We demand dollars if we want to purchase something from, let's say, Russia. So if we want to import from Russia, we have to pay in dollars. Now the rupees has to be converted into dollars. The dollars will be converted into ruble then. So dollars were used, and there was a conversion fee that was being taken for converting the rupees into dollars, dollars into ruble. So dollars were being used intensively. They are still being used intensively for the transactions, the trade that happens between the countries. Now India said that what if we only use Indian rupees? Then there will be no conversion that will be required, or even if the conversion is required, that will be between rupees and ruble. We can just neglect the dollars. So the RBI said that we are going to introduce the special rupee Vostro account so that we can trade with Russia directly, and the dollars will not be used basically. So under the special rupee Vostro account, what happens that a foreign bank, it opens the special rupee Vostro account. This is an account that is opened with the Indian bank. So a foreign bank is opening its account with the Indian bank. This is a special rupee Vostro account. Now this special rupee Vostro account, it is used only for special purpose. So special rupee Vostro account, so the correspondent bank, that is a foreign bank, can open its special rupee Vostro account with the Indian bank, an Indian bank that is approved by RBI. So foreign bank can open the special rupee Vostro account with the Indian bank. Now what happens that the Russian exporters, they are exporting oil to India. So Indian importers have to pay to Russia. So the Indian importers will pay in rupees, and this rupees will go to the special rupee Vostro account of the Russian bank. Okay, foreign bank here is the Russian bank. So Russian exporters, they are exporting the oil for which we are paying in rupees. Now the Indian exporters, we are exporting spices. Let's say we are exporting the semiconductor chips, or we are exporting, let's say, textile products and such. So we are exporting to the Russians, or we are exporting to Russia. Now they have to pay in rupees. So now this money, this rupees will be used to pay to the Indian exporters. This rupee will be used to pay to the Indian exporters. So this is the special rupee Vostro account. Got it? Vostro account basically means that the foreign banks can open their account with the Indian bank. Okay. Now special rupee Vostro account means this account will only have rupees, first of all, and it is only to be used for the trade transactions. That's why it is a special rupee Vostro account. It is special because it is only to be used for the settlement of the cross-border trade transactions. Again, let me summarize. So special rupee Vostro account. So Russian bank is opening its special rupee Vostro account with the Indian bank. Now, the Russian exporters, if they are exporting to India, we will pay in rupees. Indian exporters that are exporting to Russia, so Russia will use these rupees to pay to the Indian exporters. Got it? No. Is it clear now? Russian exporters that are exporting to India, they will be paid in rupees in the special rupee Vostro account, and this rupees will be used to pay to the Indian exporters that are exporting to Russia. Yes. Without the special rupee Vostro account, we will have to use the dollars for trade. Now, special rupee Vostro account is not compulsory. We cannot make it a compulsion. Of course, it is in the hands of the Russian banks. It is in the hands of the country. So some countries, they use this, some countries don't. Okay. So Reserve Bank of India has put in place an additional arrangement. This is just an additional arrangement for invoicing, payment, and settlement of export and import in INR, in the Indian rupees. So the imports that we are having, we are paying for that in rupees, and that rupees is being used to pay to the exporters of our country. Okay. So under this arrangement, the authorized dealer banks, the Indian banks that are authorized dealers. Now, authorized dealer, Indian banks. So they are the Indian banks that are authorized to deal in foreign currency also. Okay. So that is the idea. So authorized dealer banks, they are permitted to open special rupee Vostro account of the correspondent foreign bank. So foreign bank can have special rupee Vostro account with the authorized dealer Indian bank with the prior approval of the Reserve Bank of India. Now this special rupee Vostro account is special because it can only be used for settlement of the trade transactions. Okay. Now here you can see that Indian importers, if we are importing, we will make the payment in the rupees, and this rupees will go to special rupee Vostro account. The Indian exporters, if they are exporting, so they will get the rupees from the special rupee Vostro account. Okay, so this is the idea. No, it is not only for Russia, even Sri Lanka in MITS, it said that, okay, we can also use the SRBAs, but basically there are not many countries that are using it. We have opened the special rupee Vostro account for all the friendly nations. Okay. After review, authorized dealer banks, they are the banks that are authorized to transact in foreign currency or to like provide the foreign currency or to get the foreign currency. Okay, so all the banks are not authorized. There are certain banks that are authorized to do the transactions or to provide the foreign currency or to get the foreign currency. Okay, now after review of the procedure, now what has happened? What is the change? This is the basic idea. Now what has been changed? So it has been said that now there is no need to take the RBI approval for opening the special rupee Vostro account. So as after a review of the procedure, the RBI has introduced a significant simplification. A simplification has been provided where it has been said that authorized dealer banks are now permitted to open the special rupee Vostro accounts of overseas correspondent banks. So basically, the foreign banks can open their special rupee Vostro account with the Indian bank. The Indian banks, they do not need to take any prior approval from the Reserve Bank of India. There is no prior approval from the RBI that is required. So authorized dealer banks, that are the banks, that are the Indian banks that are authorized, they are now permitted to open special rupee Vostro account of the foreign bank, of the correspondent bank, without seeking prior approval from the Reserve Bank of India. This removes the earlier requirement of referring to the central bank. Okay, this removes the earlier requirement of referring to the central bank. The procedural change has made the process very simplified, and it will increase the opening, or it will increase the time. It will decrease the time for opening the special rupee Vostro account. It will make the process much smoother and faster because there is no prior approval from RBI that will be required. Okay, this is the idea. Try to answer this question. Authorized dealer bank, you can say State Bank of India, ICICI Bank, the big banks, Okay. In August 2025, it was said that there is no requirement of taking the prior approval from the RBI for opening the special rupee Vostro account. So for opening the special rupee Vostro account, there is no need to take prior approval from RBI. So authorized dealer banks can open the special rupee Vostro account of overseas correspondent banks without RBI's prior approval. So this is the key change that has happened. Now, coming to the next one. No, see, in the special rupee Vostro account, only for the trade transactions, it can be used, only for the trade transactions. So actual trade has to be shown. Okay, so when actual export and import is happening, for that only the money can go into the special rupee Vostro account. In the fifth cohort of the regulatory sandbox, which was theme neutral. First of all, have you heard about regulatory sandbox? Okay. Many of you have heard about regulatory sandbox. See, regulatory sandbox. Okay. See, the regulatory sandbox, it is the regulated test environment where the testing of new products and the new services can happen under the regulatory guidance, okay, and under the regulations. So basically, regulatory sandbox, it is the sandbox of the Reserve Bank of India where the RBI allows the live testing the live testing of the new products and the new services under the regulatory guidance. So that is a regulatory sandbox. Like, have you ever seen your labs? Have you ever gone to biology labs and the chemistry labs or the physics labs? In the labs, what happens? That the students are allowed to do the testing under the guidance of a faculty or a teacher. It's not like that you are left with the chemicals. No, right? Like, it never happened that the students are left with the chemicals just like that. So basically, under the guidance of the teachers, you are allowed to do the testing with the chemicals. Okay. So this is the idea of the labs. Similarly, the regulatory sandbox is also a kind of a lab where the live testing happens. The live testing happens of the new products and the new services in the financial domain that is tested live in a controlled test regulatory environment for which regulators can permit certain regulatory relaxation, where the RBI can also permit certain regulatory relaxation for the limited purpose of testing. So this is the idea of regulatory sandbox, regulatory domain where the live testing is happening of the new products and new services before it is provided to the general public. Now there are different cohorts. Cohort basically means end-to-end regulatory sandbox process. So basically a cohort is of 9 months. So the thematic cohorts, basically there are thematic cohorts. Thematic cohorts means the cohort that is the end-to-end sandbox process. It is for a theme. So first cohort, anyone remembers that what was the theme of first cohort? So cohort basically means end-to-end sandbox process. So this sandbox is opened for a time frame. Okay, so that is a cohort. The end-to-end sandbox process is happening from the screening of the new products to the testing to the evaluation. So the end-to-end sandbox process happens. Okay, so this is a cohort. So first cohort had the theme retail payments. So basically the new products, the new services, they were allowed to be tested under the first cohort, that was retail payments, for the retail payments. So this is the idea. The first cohort had the theme retail payments. So all the cohorts, first, second, third, fourth, they had different themes. Prevention of frauds, or the prevention and mitigation of frauds, as well as there was a theme of cross-border transactions and such. So different cohorts had different themes that we will discuss in the coming slide also. So the first cohort had the theme retail payments. So the sandbox was opened for the live testing of the new products and the new services for these retail payments, for the new products regarding the retail payments. Okay. Now the fifth cohort had the theme neutral. That means the regulatory sandbox was opened for 9-month timeline, and the regulatory sandbox end-to-end process from the screening to the testing to the evaluation. This is a 9-month, approximately 9 months is given for the testing, for the whole like testing and such, for the end-to-end process of the cohort. Okay. So from screening to testing to evaluation, there are approximately 9 months that is given for the new products and the new services. Now, theme neutral basically means that there is no particular theme. There is no defined domain in which you have to test the new product or the new service. If you want to test the new product related to retail payments, if you want to test the new product related to cross-border transactions, if you want to test the new product regarding the mitigation of frauds, if you want to test a new product that is in regards to blockchain technology that is used for financing, if you want to use a new product, if you want to test a new product in the regulatory domain, in the regulatory sandbox that is using the blockchain technology for the digital transactions and such. So any kind of new product or new service that is in the financial domain under the Reserve Bank of India, that can be tested under the theme neutral. Got it? So regulatory sandbox, it is a sandbox that is provided for live testing of the new products or the new services in the controlled test environment, so that the testing of new products and new services can happen for the financial domain, so that they are not directly left in the market. They are not directly provided to the people without testing. So the regulatory sandbox, this is the live testing environment under the Reserve Bank of India, where the new products and new services can be tested related to financial domain. So there are the different cohorts. Cohort is the end-to-end regulatory sandbox process, where in each cohort, there is some products that are tested, okay, for a particular theme, for a particular idea. Like the first cohort was for retail payments, the second cohort was for cross-border transactions. Now the fifth cohort was theme neutral, in which the testing for different products and services can happen for different domains under the Reserve Bank of India. Now in the fifth cohort, yes, 9-month timeline is for each cohort. Okay. Now in fifth cohort of the reserve of the regulatory sandbox, so the fifth cohort of the regulatory sandbox, this was theme neutral. 5 entities were shortlisted to commence testing of their products. So basically, these are the phases in the cohort. These are the phases in the cohort. Okay. So preliminary screening, this is not included in the 9-month timeline. The application assessment shortlisting. So application, let's say I'm sending the application for cross-border transactions, but the theme is for retail payment. So my application will be rejected in the screening itself. Okay. So preliminary screening happens, which is not included in the 9-month timeline of the cohort. So once a cohort opens, so basically preliminary screening happens of all the applications and such, then application assessment and shortlisting happens, that out of these 100 applications, the shortlisting is happening. These 5 or these 10 are the best. Okay. Then test design and integration happens. The basic test designing happens, integration happens, then the testing phase starts, and then at last the evaluation happens. So this is in each cohort, there is the 9-month timeline, and each cohort goes through these phases. Okay. Now the theme neutral, that was a neutral theme. That means the testing can happen for any product, any service under the domain of the Reserve Bank of India. There is no particular set idea on which you have to do the testing, or the product. There is no set criteria that only this kind of product should be tested or only this kind of service should be tested. Okay. So neutral means any kind of product, any kind of service can be tested under the regulatory sandbox if it is under the domain of the RBI. Okay. Now this theme neutral, the Reserve Bank had announced the opening of the 5th cohort, theme neutral, under the regulatory sandbox, dated October 27, 2013. Now in the 5th cohort of the regulatory sandbox, which was theme neutral, 5 entities, they were shortlisted to commence testing of their products, which was communicated through July 26, 2024. Now products of entities which completed the test phase, they went to the evaluation phase. So once the testing finished, they went to the evaluation phase. In the evaluation phase, it was recognized that only one product is viable to be released to the public. Only one product is good enough to be released to the public because it has less risk and better returns. Okay. So accordingly, one product outlined below has been found viable within the boundary conditions defined during the testing under the regulatory sandbox. So 5 products went under the testing phase, or they were shortlisted for the testing phase, but only one product is able to exit successfully. Okay. And this product was developed by IBDIC, that is Indian Banks Digital Infrastructure Company Private Limited, has developed this product that has been found viable under the testing under the Reserve Bank of India regulatory sandbox in the 5th cohort. Now, the Indian Banks Digital Infrastructure Company Private Limited partnered with financial institutions such as ICICI Bank, SDFC Bank, Yes Bank, Aditya Birla Capital Limited. Now, this a product that has been found viable. So the product is based on blockchain-based deep tier financing solution. This is enabled for the MSMEs. So this product is for the MSMEs so that the micro, small, and medium enterprises can get affordable finance. Okay. You do not have to focus on the product. We are not computer scientists, or we are not the engineers and such, so that we will be able to understand this much of the product information. But basically the idea is that this is for the MSMEs, and this is to provide affordable finance for the MSMEs. Now the entity has now exited the 5th cohort. It has become successful. It has successfully exited the 5th cohort. The product may be considered for adoption by regulated entities subject to compliance with applicable. So product may be considered for adoption by regulated entities. So it has been said, RBI has said that it is good to go, it is good, you can use it, the regulated entities, they can use it, subject to compliance with the applicable regulatory requirements. Voice break ho rahi hai, is it really? Okay, no. So this is the idea. Any confusion, anyone? Why? Yes, you have to do the ratification, Sarkar. That is what has to be done. Okay. Now moving forward. So this is about what you have to remember is this: which entity in partner with which entity. Okay. So fifth cohort has finished. The only one product was found viable, developed by this entity in partner with these institutions. Okay. Now on tap. Now the theme neutral has been opened for on tap. On tap, first of all, means that on tap applications refers to mechanism allowing continuous summation. So what happens that once the cohort finishes, so it was recognized that once the cohort has finished, let's say the retail payments. So first cohort was for the retail payments, second cohort was for the cross-border payments, third cohort was for MSME lending, fourth cohort was for prevention and mitigation of financial frauds, fifth cohort was for theme neutral. Now once a cohort finishes, let's say the retail payment cohort finished 5 years back. So will we not do further innovation in the retail payment domain? The cross-border payments cohort finished 4 years before. So will we stop the innovation in cross-border payments? Should we do that? Can we do that? No, right? We should not be doing that. That's why RBI came up with the idea. So on-tap application facility, this was announced in October 2021. So RBI recognized that we need to have the on-tap facility. Now, what is on-tap facility? On-tap, like how the tap keeps, like if you open the tap, it keeps running. So similarly, the RBI wants the innovations to keep running, the innovations to continue and the testing to continue, even for the earlier ideas. How will that happen? So basically, on-tap facility means the on-tap application, they refer to mechanism allowing continuous submission and testing of innovations even after the official regulatory sandbox cohort have closed. So once the cohort have closed, the on-tap facility will be allowed in which the application can be sent by the innovators on the continuous basis to the Reserve Bank of India that we want to do testing under the regulatory sandbox. And RBI will continuously see these applications and will allow the testing of the viable products. Got it? Got the idea of the on-tap facility? This will help in continuous innovation and engagement with innovators and proactively respond to the dynamics of rapidly evolving fintech scenarios. So on-tap facility means that once the cohort ends, once the 9-month period ends, then the on-tap facility will be provided. So continuously on the previous themes, the application will be taken by the RBI and RBI will select the application and will allow the applicants, if found viable, they will allow the applicants to continue the testing in the regulatory sandbox. Yes. So on-tap, so RBI has been operating where it has been written theme neutral. This testing is on, but now one has exited. Okay. So RBI has been operating the regulatory sandbox framework since 2019 based on the experience gained and feedback received from stakeholders. And on-tap facility was announced in October 2021. On-tap facility allows continuous innovation and engagement with innovators and proactively respond to the changes in the fintech scenario, in the financial technology scenario. So basically the theme neutral, this cohort has ended. So now the RBI has said that on-tap facility will be provided for theme neutral. So if the innovators want to test their new products, want to test their new services in the domain under the Reserve Bank of India, so they can send application to the Reserve Bank of India. Okay. So interested entities may submit their application along with supporting documents through Pravah portal. Now you have to tell me the full form of Pravah portal. It is one of the most important portals of the Reserve Bank of India. Okay. So basically Pravah portal is the portal through which RBI receives the applications now. Okay. Or it receives. Okay. Very good. Okay, so interested entities may submit their application along with supporting documents through Pravah portal. This has been opened. It is platform. Okay. It is platform for, try to answer this. In YouTube also, anyone knows about the Prava portal? What is the full form of Prava portal? Okay, and give me the answer for this. Okay, so Prava portal. Okay, so under the fifth cohort of RBI's regulatory sandbox, which entities products? First of all, Indian Bank's Digital Infrastructure Company Private Limited, its product has been found viable and has successfully exited the cohort. The Prava portal, it is platform for regulatory application, validation, and authorization. Okay, so that is Prava portal, the platform for regulatory application, validation, and authorization. And C is the right answer here. Now coming to the next news article, that is co-lending arrangement. Now before starting with the co-lending arrangement, let's go to the document and let's see that how much we have covered. Okay. I will like hear your queries at the end of the session also. Let me share the screen just a second. Are you able to see the document first of all? So this is the document for your RBI NewsTap, August 1st to 31st, 2025. Now we are doing the RBI NewsTap 1st to 15th August 2025. Okay. So these are the articles. So first, we have done the Monetary Policy Committee statement August 2025. We have done the statement on developmental and regulatory policies, amalgamation of the New India Cooperative Bank Limited with Saraswat. We have done the international trade settlement in INR revised procedure for opening of SRBA, regulatory sandbox, fifth cohort on theme neutral, and we have done this spatial rupee Vostro account. Okay. Now the last one that we will be doing, as well as there are some additional things that we will be doing. So that will be this. Now let me just ask you certain questions. I will be asking the rapid fire questions. So in the Monetary Policy Committee, what is the repo rate decided by the Monetary Policy Committee in August? 5.5%. What is the real GDP growth forecast or projection that is given? 6.5. The forecast, inflation forecast given by the MPC 2025-26, 3.1%. Very good. So these are the data that we have discussed. Okay, 3.1%, 6.5% for real GDP growth, and CPI inflation 3.1%. Okay. Now coming to the next one, statement on developmental and regulatory policy. We have discussed about the standardization of procedure. Okay. And we have also discussed about the auto bidding facility. What is the bidding amount, minimum amount? 10,000 and in the multiples of 10,000. Very good. It is allowed for dated government securities, for the long-term government securities, or for the T-bills. It is allowed for the T-bills. Very good. Next is, in principle, approval to AU Small Finance Bank has been provided. Tell me, what is the minimum net worth requirement? 1,000 crores. What is the net profit in how many years? In the last 2 financial years. Okay, as well as how many years of satisfactory track record should be there with the scheduled status? 5 years of satisfactory track record should be there. The gross non-performing asset should not be less than or equal to should be less than or equal to 3%, as well as the net non-performing asset should be less than or equal to 1%. Okay, very good. There, that is the idea. Okay, next is very easy, that the New India Cooperative Bank has amalgamated with the Saraswat Cooperative Bank. Okay, revised procedure. This also we have discussed that there is no requirement of taking the prior approval from the RBI now. Now the fifth cohort. What is the theme for fifth cohort? Theme neutral. What is the theme for first cohort? Retail payments. Very good. Okay, so this is the idea. Next is investment in government securities by person outside India through special rupee Vostra account. Okay, this is what we have to discuss. This is left. Okay, so the regulatory framework governing investment in debt instruments. So basically, what happened? So basically, see, in the special rupee Vostro account, let's say in the special rupee Vostro account, if there is the special rupee Vostro account, let's say the exporter, Russian exporters, they are getting rupees 1 lakh rupees for their exports. Okay, so the Russian exporters, let me just, okay, better. So the Russian exporters, they are getting in the special rupee Vostro account, they are getting, let's say, 1 lakh rupees. Okay, and the Indian exporters, okay, the Indian exporters have to be paid 50,000 or 60,000 rupees. So how much is left in the special rupee Vostra account? So Russian exporters, for their exports that they are doing to India, they are getting 1 lakh rupees in the special rupee Vostra account. Indian exporters, for the exports that they are doing to Russia, they are getting 60,000 rupees. So 40,000 is still left in special rupee Vostra account, right? Now what will happen to this 40,000 rupees? Now the Russian exporters are saying that, or the Russia is saying that, okay, 40,000 is left in the account. So will India use it? No, this, it has been said by the Reserve Bank of India that this 40,000 rupees can be used for investment in India. For investment in India. So the Russian banks that have opened their special rupee Vostro account in India, they can use the extra amount left in the special rupee Vostro account to invest in India. Got it? Is this clear? So basically, if there is any extra amount that is left in the special rupee Vostro account, if there is any extra amount that is left in the special rupee Vostro account, that can be used for investment in India. That is the idea. Now, where the investment can happen? So basically, special rupee Vostro account, that is the foreign bank is opening its account with the Indian bank to get the money for the exports. And this money is used to pay for the Indian exporters. Okay, if any extra amount is left, let's say rupees 40,000 is left in the special rupee Vostro account, it can be invested in the government securities. That is what this article is saying. Okay. Indian bank means any bank that is authorized by RBI, such as the State Bank of India, Punjab National Bank, and such. The big banks, we can say. So here, the persons resident outside India maintaining, or the entities maintaining special rupee Vostro accounts, they are now permitted to invest their surplus rupee balance. So in the special rupee Vostro account, the surplus amount that is present in the special rupee Vostro account, that can be used to invest in the central government securities such as the treasury bills and such. Okay, the revised directions come into effect immediately, and the surplus amount can be invested in the central government securities, including treasury bills. So central government securities can be dated, or the long-term central government securities, or the treasury bills also. So under the SRVAs, under the special rupee Vostro account, if there is a surplus amount that is left, that can be invested in India in the central government securities, including the treasury bills. The Russian exporters will be paid by the Russian bank. Next. So now we are going to discuss the co-lending arrangement. So let's go back to the PPT. So here you can see that we have covered the articles that is given in your document. Okay. So now the Reserve Bank of India co-lending arrangement directions 2025. So the regulated entities, see, basically the bank can come into the co-lending arrangement with the NBFC to provide the loans to the farmers, or to provide the loans to the micro, small, and medium enterprises. Now the banks, they can take the deposits, right? They can take the time deposits, they can take the demand deposits. Demand deposits means these deposits can be withdrawn on demand, like your money in the saving account, the money that you have in the saving account. So demand deposits, these are the deposits that we can withdraw on demand. These are your the money that you are keeping in your saving account or current account. Time deposits, anyone can give me the example of time deposit? Fixed deposit, recurring deposit. These are the deposits that are maintained with the bank for a timeline. Okay, so the banks can accept the deposits. Using these deposits, the bank can give the loans. Now the NBFCs, can all NBFCs accept the deposits? First of all, no. All NBFCs cannot accept the deposit. There are only certain NBFCs, only a few NBFCs that are allowed to accept the deposit. Now, these few NBFCs, they cannot accept demand deposits. They can only accept the time deposits, that is the fixed deposit and such, for a minimum time period of 12 months and the maximum time period of 60 months. Okay, so basically the banks, they can do the co-lending with the non-banking financial companies, with the NBFCs. Now the banks and NBFCs together can lend to the different domains, to the farmers or to the micro, small and medium enterprises and such. Okay. Now the banks, they have the means to gather the funds, because they can take the demand deposits that can be withdrawn on demand, like in the saving account, in the current account. They can also get the deposits in the form of time deposits. Okay, and all the banks have the authority to get the deposits, so they can use these deposits to lend. But the NBFCs, they do not have the deep pockets like the banks. NBFCs, many of the NBFCs, they cannot accept the deposits, and certain NBFCs that can accept the deposit, they cannot accept the demand deposits. They can only accept the time deposits, that also for the minimum of 12 months and the maximum of 60 months. So there are restrictions on the NBFCs. So these NBFCs, they find it harder to gather the funds, but they have the access to the people or to the areas. So NBFCs is said to have access to the local areas through their local agents, because the NBFCs, they are focusing on a particular area. So they have the local agents, they have the agents with themselves. So NBFCs, they have the reach to the far off areas, and the banks, they have the deep pockets, they have the money. So it is said that sometimes the banks and NBFCs come together because the banks have the money and the NBFCs have that reach in the local areas. They have that connection in the local areas. Okay, so they come together to co-lend. NBFCs bring in the customers, the banks bring in majority of the funds. So this is how the co-lending happens. Let's say the NBFCs are providing 20% of the funds and 20% of the loan, and the bank is providing 80% of the loans. But the NBFCs is helping the banks to get new customers, and the banks is helping the NBFC so that more lending can happen. Okay. First of all, this is clear that why co-lending happens, because both institutions, they have certain advantages. Banks have the advantage of gathering the funds. NBFCs have the advantage of the local connection that they have. Now, regulated entities can enter. So banks, NBFCs, they are regulated entities. They are regulated by the Reserve Bank of India. Okay, so banks, NBFCs, they are the regulated entities that are regulated by the Reserve Bank of India. So regulated entities, they can enter into a lending arrangement with other regulated entities. So bank is coming into the arrangement with the NBFC for extension of credit, for providing the credit to the borrowers, subject to compliance with the existing regulations. Okay. Now what happened, that there is no generic regulatory framework. There is no particular framework, generic framework that is provided for such lending arrangement, for such co-lending arrangements. That's why RBI has come up with this co-lending arrangement directions. So there was no generic regulatory framework that was provided by RBI for this co-lending arrangement. But there was only one framework that the RBI had provided. In 2020, RBI provided the co-lending norms for banks and NBFCs for the priority sector. The priority sector lending, I hope you know that there are priority sectors that are identified, such as agriculture, MSMEs, export, education, housing, renewable energy, okay, social infrastructure. So these are the priority sectors that are identified, and the banks have to lend to these areas a certain amount or a certain percentage of their lending. So these are the priority sectors where the lending should flow. So the RBI said that the banks and NBFCs, they can come under the co-lending arrangement to provide the loans to these areas. Okay, any confusion? So co-lending framework or co-lending guidelines were provided for banks and NBFCs to come into the co-lending arrangement to do the co-lending to the priority sector. Now the RBI is saying that this is only for priority sector. What if the banks and NBFCs are coming into the co-lending arrangement for the other areas also? So RBI is now saying that there is no generic regulatory framework for such lending arrangements, for co-lending arrangements involving the banks and NBFCs. Now we need to provide the direction. So now RBI has said that in view of this, to broaden the scope of co-lending, comprehensive revised directions has been brought by the Reserve Bank of India for the co-lending arrangements. So providing the regulatory clarity on the permissibility of such arrangements. So basically RBI has released the new directions, the framework for the co-lending arrangement. Now for all the co-lending that happens, either in the priority sector domain or not in the priority sector domain, if the co-lending is happening, that should follow the new directions, that should follow these directions. Okay, that is the idea. So now these directions are issued in exercise of the powers conferred by the section by the Banking Regulation Act of 1949, Reserve Bank of India Act of 1934, and National Housing Bank Act of 1987. Okay, co-lending means that bank and NBFC, they are coming together to lend. Okay, we will discuss the exact definition of co-lending in the coming slides because the RBI has given the exact definition of co-lending. Okay, so that we will discuss. But this is the idea that the RBI has brought a new framework, new directions for co-lending. Now, these directions shall be called Reserve Bank of India Directions 2025. These directions shall come into force from January 1, 2026. No, you do not have to remember the acts. Just remember that the directions have been released in under Banking Regulation Act, Reserve Bank of India Act, and National Housing Bank Act. So the directions have been released by the Reserve Bank of India under the particular act because these acts provide the power to the RBI. Okay. So now these directions shall come into force from January 1, 2026. Now the banks, as per their internal policy, they can start following these new directions from an earlier date, let's say from November 2025, from December 2025. But the banks have to compulsorily follow the new directions at least from January 1, 2026. So these directions shall come into force from January 1, 2026. But if the banks want to follow these directions before that also, the new directions can be followed as per the internal policy. Now, existing co-lending arrangements and the new co-lending arrangements entered into prior to the effective date. So prior, let's say, the bank A has decided to follow the guidelines from November 2025. So any co-lending arrangement before that do not has to follow the new directions. They can follow the prior regulations only. But the new co-lending arrangements will have to follow. So once the bank has decided to follow the new directions, so any co-lending arrangement that is happening after the direction has been followed, so that new co-lending arrangement should be as per the new directions, basically. Okay, but the banks have to compulsorily follow the new directions from 1st January 2026. This is the idea. Now, applicability. So first of all, co-lending arrangement, as I've told you that we will see the definite definition of co-lending arrangement. So basically co-lending arrangement, it is through a formal agreement that a bank under NBFC or the regulated entity can come into the co-lending arrangement. In the co-lending arrangement, there is a originating regulated entity that is originating the loan, that is initiating the loan. Okay, and there is the co-lending partner that is lending with this originator of the loan. So basically there is a originator of the loan that is originating the loan, that is initiating the loan, that is providing for the loan, and the maximum loan is provided by the originating regulated entity. Then there is the co-lender that is co-lending, that is lending with this originator. So let's say the bank is providing 80% of the funds, NBFC is providing 20% of the funds. So originating regulated entity is the bank, and the partner regulated entity that is co-lending is the NBFC. Okay, so basically there is a originator that is originating the loan, so that a regulated entity is originating the loans, and the another regulated entity which is co-lending, they can jointly fund a portfolio of loans. They can jointly fund the multiple loans comprising of either secured or unsecured loans. So loans can be secured, loans can be secured. That means they are secured by a collateral. You have kept your gold as collateral, you have kept your house as collateral, you have kept your land as collateral. So loan that is given by the bank can be secured through the collateral that you have kept as girvi, that is collateral that you have given. Or the loan can be unsecured. Loan can be unsecured also. That means there is no collateral that is kept. So loan can be secured also and unsecured also. So basically, the co-lending arrangement, under the co-lending arrangement, there is the originator of the loan, that is originating regulated entity, and there is the partner regulated entity. They are doing co-lending. 80% of the loan, let's say, is provided by originator, and the 20% of loan is provided by the partner. Okay. Now, the proportion in which the lending will happen has been pre-decided. So the proportion has been pre-decided. The risk proportion, the revenue proportion has also been pre-decided as per the agreement. This is the idea. Yes, Gaurav, correct. Ex ante means that planned, like already the agreement has been formalized. So formalized through an agreed agreement or pre-decided agreement. Okay, so agreement has to be formed first, then only the loans can be given. Got it? So what we have discussed is that the co-lending arrangements, for that there was no generic directions that were there. Co-lending directions were only for the priority sector. So now the RBI has said that we are bringing the co-lending directions for the co-lending in all the domains. The RBI has released the co-lending directions that has to be followed from 1st January 2026, but banks can follow it from an earlier time period also. Once the banks decide to follow the new directions, so from then onwards, once the bank has decided to follow the new directions from whatever date before 1 January 2026, so the banks have to follow the new directions for all the new co-lending arrangements. Okay, that is the idea. Applicability. Now, co-lending arrangement we have discussed. Co-lending arrangement is the arrangement between a originating regulated entity that is initiating the loan and the partner regulated entity. The proportion in which they will give the loan has been decided as per the agreement. The proportion of their risk and the return has also been decided as per the agreement. Now, applicability, who, like which entities can come under the co-lending arrangements? So commercial banks, excluding the small finance bank, local area bank, and regional rural banks, all India financial institutions, that is NABARD, NHB, SIDBI, NAFED, and Exim Bank. So these are the all India financial institutions. And non-banking financial companies, including housing finance companies, they are the regulated entities of the Reserve Bank of India that can come under the co-lending arrangement. Digital lending arrangement. Now, before in March, I guess, or in May, there was the digital lending arrangement that was released, that if the loan is given through the digital platform, so that should follow the digital lending guidelines. So let's say the loan is given through the digital platform, that has to follow the digital lending guideline. But if the loan is given under the co-lending arrangement, so that also has to follow the co-lending guidelines. So a loan that is given through the digital platform has to follow the digital lending guidelines. But if the loan that is given through the digital platform is also given under the co-lending arrangement, so that also has to follow the co-lending directions. Okay. That is the idea. So these directions shall not apply to loans sanctioned under multiple banking, consortium lending, or syndication. So let's understand this. First of all, multiple banking means what? Multiple banking means, let's say I am a borrower. I'm going to State Bank of India to give me loan. I'm going to Punjab National Bank to give me loan. I'm going to some NBFC to give me loan. I'm going to ICICI Bank to give me loan. So I'm taking loan from multiple banks. Okay, I have taken credit card from one bank. I have taken a car loan from one bank. I have taken a home loan from one bank. So I've taken multiple, or let's say I'm taking loan from multiple banks. That is multiple banking. Now, what is consortium lending? Consortium lending means, let's say there is an infrastructure project. That is the project that requires 1500 crores. Now, a single bank will not indulge such huge amount or will not provide such huge amount. So multiple banks are coming together to provide loan to this single borrower or for this project. That is consortium lending. A consortium of banks is being made so that these banks can come together to provide the loan for the infrastructure project. Now there is syndicate loans or there is syndicate lending. In the syndicate lending, there is a lead bank that is appointed. Now the lead bank on behalf of the borrower is raising the funds for the borrower. So the lead bank will be the bank that will be deciding the terms and conditions, or that will be the one on behalf of the other banks. This lead bank will be taking the responsibility of deciding the terms and conditions. So in the syndicated loan, it is kind of like the consortium lending where multiple banks are coming together to give the loan to the borrower. But in the syndication loan, there is a lead bank that is appointed that has the responsibility to a higher extent. Any confusion here, first of all? Okay. So basically, these directions shall not apply to loans sanctioned under multiple banking, consortium lending, or syndication. So these directions will only apply for co-lending. These directions will not apply for multiple banking. These directions will not apply for syndication. These directions will not apply for consortium lending. Who bears the liability of repayment? So the borrower. Borrower has the liability to repay in all kind of loans. Okay. So remember that co-lending directions will not apply to other kind of loans, because these other kind of loans, they have different guidelines for them. Okay. Now, save as otherwise permitted in terms of these actions, no regulated entity shall enter into any co-lending arrangement which is not compliant with these directions. Basic understanding. If the co-lending, so no co-lending arrangement should be formed, or there should be no co-lending that should happen that is not compliant with the directions of the Reserve Bank of India. Now, general guidelines: each regulated entity under a co-lending arrangement shall be required to retain a minimum 10% share of the individual loans in its book. That means, let's say this is a bank. Let's say it is giving 99% of loan and the NBFC is giving 1% of loan. Can we say that this is co-lending? Can we say that the NBFC has any interest in this loan? No. 0.1%. Let's say a bank is giving 99.9% of loan, NBFC is giving 0.1% of loan. So this is not the co-lending that we want. RBI is saying, basically RBI is saying that each regulated entity, okay, Garima, just wait a second, okay? So each regulated entity under a co-lending arrangement shall be required to retain a minimum 10% share of the individual loan in its book. So basically, if a bank and NBFC are coming together under the co-lending arrangement, so at least, like, bank is the originator, so it can provide 85%. Let's say NBFC is the partner, it is providing 15%. So basically, a minimum 10% of share has to be provided by the partner. That is the basic idea. So each regulated entity shall provide a minimum of 10% of the individual loan, so that the entities, they have the interest in the loan. They are interested in that loan. Okay. Credit policy requirement: each regulated entity credit policy must include internal cap on the share of lending portfolio under the co-lending arrangement. That means basically that if a bank is providing 1,000 crore worth of loans, the total loan that is provided by this bank is 1,000 crore. Now, all the loans, can it go under the co-lending arrangement? No. So there is an internal limit that has to be decided, that out of the total loan that the bank will provide, how much should be under or what is the limit that can go under the co-lending arrangement. Okay. So there is internal limit that has to be decided. Internal limit has to be decided on the share of lending portfolio under the co-lending arrangement, that how much loan should be under the co-lending arrangement. There should be internal limit. Okay. I will let you, if this, there are students that are raising their hand for asking their queries. So you can write your query in the comment section, or you can send me personally also. But I will take your queries in the vocal manner at the end of the session, because I have to change the settings and such now. Target borrower segments. So in the credit policy, it has to be decided that which borrower segments will be targeted through the co-lending arrangement. Due diligence norms for evaluating the partner regulated entities. So basically, if a bank is deciding for a partner NBFC, so the due diligence has to be done that the partner NBFC, is it efficient? Is it ethical? Is it working in an ethical manner and such? Okay. So each regulated entity in its credit policy, it should include the internal limit for the co-lending arrangement. How much money will flow to the co-lending arrangements, or how much loans will be given under the co-lending arrangement? The limit has to be decided by the bank and NBFC. Target borrower segments, due diligence norms or rules has to be written so that the partner regulated entities are evaluated before making them the partner. Customer service and grievance redressal framework should be proper. Okay. Inter-regulated entity agreement. So when the arrangement is being signed by the partners, the arrangement should clearly specify the terms and conditions of the arrangement, borrower selection criteria, how the borrower will be selected for the co-lending arrangement, or in the co-lending, how the borrower will be selected, product line and geographical or sectoral coverage. So which product lines, like the agricultural loans, the micro, small and medium enterprises loans, or the home house or the consumer loans and such, which loan categories will be taken care of under the co-lending arrangement that is signed between the two entities. So if two entities are signing the co-lending arrangement, they have to decide the terms and conditions for the arrangement. They have to decide the borrower selection criteria, and that has to be written in the co-lending arrangement, the product lines in which they will be co-lending, as well as the geographical or sectoral coverage or the areas in which they will be co-lending. The fees payable for lending services. Lending services basically means, let's say NBFCs are providing the customer acquisition, as well as they are providing the servicing. Like they will be the ones that will be collecting the money if the borrower is not repaying and such. The monitoring, let's say the bank is saying that we will be doing the monitoring. Okay. And we will be managing the loan portfolio. Okay. So basically the different, like the originator as well as the partner, they are taking over different lending services. NBFCs are saying that we will be responsible for customer acquisition, will be responsible for the servicing and the recovery. And the bank is saying we will be responsible for monitoring and other tasks. Okay. So this is the basic idea, that different entity can provide different services, and the NBFCs can say that we will charge you for the customer acquisition that we are doing, for the customers that we are providing. Okay, so we will charge you. So there can be fees payable for lending services. So if NBFC is providing a lending service, it can charge a fee also. So that has also to be notified under the co-lending arrangement, so that there is no later on problem that comes. Okay, segregation of roles and responsibilities, that has to be segregated so that the entities are aware about their roles and responsibilities. Timelines for sharing critical information, like the important information. The NBFC has realized that the borrower is going to default. So there shall be set timeline in which the NBFC inform this to the bank that the borrower might default. Okay, there is problem or there is stress that is coming to the borrower. Let's say something has happened to the crop. The loan co-lending, under the co-lending, the loan was given to the farmer and the crop has ruined because of the floods or because of the water. The crop has ruined. So the NBFC has recognized this because the NBFC has the local connections and the local agents. So NBFC has to inform this to the bank also. So the timeline has to be decided for sharing the critical information. Customer interface norms, rules and regulations, that who will be connecting with customer. It's not like the banks are saying something to the customers, the NBFC is saying something to the customer. That should not happen. Only one entity should be connecting with the customer, should be connecting with the borrower. So customer interface rules and protection measures and grievance redressal norms has to be written. Okay, so these all conditions have to be written in the agreement that is signed between the two entities. Now, next is loan agreement with borrower. So like there is the agreement between the co-lending partners, there is agreement between the lenders and the borrowers also. So the lender must disclose who is responsible for sourcing, servicing and customer interaction. So let's say the NBFC has been given the responsibility. One regulated entity must be identified as the single point of contact. Like I have told you that bank and NBFC, they both cannot be interacting with the customer because it will make the customer confused. If someone is saying something, some other person is saying something. So only one single point of contact should be provided to the borrower. And if there is any change in the point of contact, that has to be notified to the customer in advance. Must include provisions for customer protection and grievance handling, as well as key fact statement has to be provided to the borrower. So whenever the borrower is borrowing, a key fact statement is provided. In the key fact statement, it is like a one-page summarized document where it is informed that, okay, the loan is being provided by these entities, the loan interest rate will be charged this, as well as these are the additional fees that will be taken for documentation, as well as for legal purposes, the additional fees will be taken. So all this information is provided in the summarized format in the key fact statement. So key fact statement has to be provided for the co-lending loans also. Priority sector lending, let's say the loan is given by the bank plus NBFC for the farmers or for the micro, small and medium enterprises. Okay. Now these loans come under the priority sector also. So they will be even under the co-lending arrangement, if the loans are given to the priority sector, so they can be used for meeting the target of the priority sector lending. So if a co-lending arrangement loan qualifies as priority sector lending, so if a co-lending arrangement loan that is given to farmer or that is given to the micro, small and medium enterprises, so they are qualifying as the priority sector lending. So each regulated entity can claim the priority sector status in respect of their share that they have provided. So bank has provided 80% of the loan. So its share, it can inform that this much is the priority sector lending that the bank has done. Okay. So the bank is providing 80% of the loan that is going to the farmer under the co-lending arrangement. So this 80% of the loan, this share can be treated as the priority sector lending. Okay. So basically, how much share you are providing, on that basis, your priority sector will be notified. If a co-lending arrangement loan qualifies as priority sector lending, each regulated entity can claim priority sector status in respect of their share of credit under co-lending arrangement. So it's not like that 100% of the loan that is provided, that will be under the priority sector for the bank. No, bank has provided 80% of the loan. So only for the bank, in the books of the bank, only 80% will be notified under the priority sector target. Got it? So let's say under the co-lending arrangement, 10 lakh rupees is provided for the micro enterprises. Okay. Now the bank has provided 8 lakhs. The NBFC has provided 2 lakh. So in the books of the bank, the priority sector lending will be how much if we are seeing this co-lending? Will it be 10 lakh, the absolute amount? No, it will be 8 lakh only. That is the actual amount provided by the bank. Okay. So basically, each regulated entity can only claim its own share of the credit under the priority sector under the CLA. Okay. So bank cannot say that we have provided 10 lakh to the priority sector. No, the bank has only provided 8 lakh. Okay. So it can claim under the priority sector only 8 lakh. That is here. Now, NBFC specific requirements. So NBFCs, they must follow accounting standards for booking unrealized profit. Now, what is unrealized profit? Let's say I have given you loan. Let's say I have given Manish loan of 10 lakh. He has to give me the interest rate of, Okay. So he has to give me the interest rate of 10,000. Now, let's say that he has to give me 10,000 for 12 months. So can I say that I have the profit of 1,20,000? Can I say so? Yes. If I'm providing Manish 10 lakh rupees, he has to provide me every month 10,000 rupees as interest. So for 12 months, can I say that my profit is 1,20,000? I can say so, but these are unrealized profits. These are unrealized profit. These are my profit, but they have not been realized till now. So they are called unrealized profit. Do you get the idea of unrealized profit now? Unrealized profit is the basic idea that you are going to get the profit, but you have not till now got the profit. You are expecting to get this money. What if I say that, okay, no, Manish, I'm not going to provide you the interest. I'm not even going to return your money. Okay. So I become a defaulter basically. Okay. So that can also happen. So these profits, they are unrealized profits until they actually come to the NBFC. So NBFCs, they have the habit of booking or recording the unrealized profit also. So NBFC might recognize profit before it is actually received in cash. That's called unrealized profit. So let's say the loan tenure is 5 years and the NBFC has given the 10 lakh rupees, let's say. NBFC has given 10 lakh rupees and NBFC is expecting 10,000 rupees every month. So NBFC will record that 1,20,000 NBFC is going to receive this year, this particular year. But this has actually not been received yet. This is unrealized profit for this year. Such unrealized profits must be deducted from the common equity tier 1 capital, okay, or the net owned funds. Basically, common equity tier 1 capital, this is the most liquid kind of capital that the banks or the NBFCs have. This is the most liquid capital that the banks or the NBFCs have, that the NBFCs can use in the distress kind of situation. That is the common equity tier 1 capital. So the unrealized profits have to be deducted from the common equity tier 1 capital. See, here we are talking about the accounting standards of the NBFCs. The banks, they might not record it. Okay. Try to answer this question now. Arnav, do like you can, if you have any query regarding your course and such, you can write to hello@edutap.co.in. Okay. Because I don't think that I know about the solution here. So do write at hello@edutap.co.in. Okay. Okay. So with reference to the newly issued RBI co-lending arrangements, the directions will apply to co-lending arrangements entered into by commercial banks, excluding small finance bank, local area banks, RRBs, all India financial institutions, and NBFCs, including housing finance companies. Correct. Each regulated entity must retain at least 10% of every loan under the co-lending arrangement. Correct. Loans sanctioned under multiple banking consortium lending or syndication are not under the scope of, they are not under the scope of these directions. So this is wrong. If digital lending involves co-lending by regulated entities, both the directions have to be followed, the digital lending directions and co-lending directions. So first, second, and fourth are correct. So the answer here is D. Very good. Any confusion, anyone till now? So these directions are a little lengthier. We are going to continue with it. Okay, but I hope till now everything is clear. So let's continue with the directions. Okay. Now, interest rate. Now, if the banks are giving 80% of the loan and the NBFC is giving 20% of the loans, so should they charge different interest rate? Let's say bank is charging 6% of the interest rate and NBFC is charging 10% of interest rate. Can they do so? No. So what do we need? We need a blended interest rate that is catering to the requirement of bank also and NBFC also. Very good. So here, what is the requirement? So the interest rate and any other fees or charges. So basically, the final interest rate, only a single interest rate has to be charged, and the final interest rate will be charged from the borrower. This shall be blended interest rate that is catering to the requirement of the bank and the NBFC. So let's say the NBFC charges 10% of the interest rate, the bank charges 6% of the interest rate. Now 80% of the loan is given by the bank, so the interest rate will be weighted for the bank, and 20% of loan is given by the NBFC. So the interest rate of the NBFC will be weighted and then they will be blended to come to a final interest rate. Okay, that will be charged from the customer. So basically, final interest rate charged to the borrower shall be blended interest rate, which is calculated as an average rate of interest derived from the interest rate of the entities. Okay, as per their internal lending policies and risk profile of the same or similar borrower, weighted by the proportion of the lending that they are doing. So if the bank is doing 80% of the lending, so 80% of weight will be given to the interest rate charged by the bank. If NBFC is giving 20% of the lending, so 20% is the weight that will be given to the interest charged by the NBFC. Then the final interest rate will come. That is the idea. Okay, so this is the idea. That means a final interest rate will be there. That will be the blended interest rate that will be decided on the basis of the interest rate charged by the different entities, and it will be decided on the base of the weight to the proportionate funding that they are doing. Any change in rates by respective regulated entities under the co-lending arrangement will be made as per their credit policy. Let's say the repo rate has been increased and the interest rate is being increased by the banks and NBFCs. So there will be a change that will happen to this blended interest rate also. Okay, so the updated blended rate has to be informed to the customer. Next is any fees or charges payable by the borrower in addition to the blended interest rate. This interest rate is the rate that has to be paid for the loan, but the customers also has to pay some additional fees. They also have to pay some charges for the documentation, for the legal purposes also, and such. So the interest rate that you are paying for the loan, as well as the fees, charges that you are paying additionally for taking the services and such. So all this is the total cost of borrowing. That is the annual percentage rate. This is the annual percentage rate. This is the cost of borrowing. Got it? Don't focus on that, Upasna. Is this clear? Annual percentage rate. So annual percentage rate, this is the actual cost of borrowing, because this is taking into account that how much interest you will be paying, as well as how much additional fees and charges you will be paying. Let's say you are paying 6% of interest rate, but your fees and charges are so high. It is nearly 1% of the loan that you are paying on the yearly basis. So your annual percentage rate is actually 7%. This is the cost of borrowing that you are paying with the fees and charges, that is. So this has to be disclosed in the key fact statement. So all these information has to be disclosed in the key fact statement. Now these are the charges that is taken from the borrower. Now let's say that if NBFC is providing the customer acquisition facility and the NBFC is providing the servicing facility for the loans, that they are collecting the loans and such, they are recovering the loan. So NBFC, can they take the lending service fee? Can they take the lending service fee? Yes, they can take the lending service fees. No? This we discussed, that there can be a fees payable for the lending services. So NBFCs can take the lending service fees. Yes, depends on the internal agreement, but they can, right? So NBFCs, they can take the lending service fee. So this lending service fee has to be actually notified. So as part of the credit policy, as part of the internal credit policy, the regulated entity, they shall lay down the objective criteria for the fees or charges payable for lending services by the bank to the NBFC or by the NBFC to the bank. So this is amongst the lenders only. So these are the charges that is taken from the borrower, and these are the lending service fees that is taken amongst the lenders only, depending upon the relevant facts, that who is providing which kind of service, as well as what is the quantum of loan, if the NBFCs are providing customer acquisition, if they are providing servicing and the recovery of the loan and such. So NBFCs will want to take some fees. Okay, now, so this is the idea, that the fees has to be decided on the basis of the objective criteria laid down in the credit facility. Now, such fees or charges, that is the fees for the lending services amongst the lenders, they shall not involve directly or indirectly any element of credit enhancement or default loss guarantee unless permitted otherwise. That means this fees that is charged between the lenders, they shall not include directly or indirectly any fees or charges that is for the default loss guarantee or credit enhancement. Now, what is default loss guarantee and what is credit enhancement, that we will understand. But any confusion till now? We will be doing some small news also. Okay. Now, credit enhancement basically means a contractual arrangement in which an entity provides some degree of added protection to other parties. So basically, credit enhancement means a contractual arrangement. Let's say originator regulated entity, that is the bank, is saying that we are going to provide the NBFC certain level of protection, so that the NBFC agrees to become partner of this bank, so that the NBFC agrees to provide customers to the bank. Okay, so credit enhancement means a contractual arrangement in which usually the big entity, it provides some degree of protection to the other parties to a transaction to mitigate the credit risk for the NBFC. Okay, That is credit enhancement. In this same manner, there is also the default loss guarantee. This is a contractual arrangement where the originator of the loan, that is the originating regulated entity, it is providing the default loss guarantee to the guarantee to the NBFC that if the default happens, then certain part of the risk of the NBFC will be taken over by the originator, or certain part of the loss will be taken over by the originator. Okay. So default loss guarantee, it is a contractual arrangement in which the originating regulated entity and the partner regulated entity, they are coming into the contract where the originating regulated entity guarantees to compensate the partner for loss due to default up to a certain percentage. Okay, that is the idea. So default loss guarantee, originating regulated entity, they can provide default loss guarantee up to 5% of the outstanding loan. That is the loan that is outstanding, that is still remaining from the borrower end. So the default loss guarantee, this is limited to 5% only. That means originating regulated entity can provide the default loss guarantee up to the limit of 5% to the partner regulated entity. So credit enhancement and default loss guarantee, they are like same coin, two faces. So credit enhancement is saying that the entity will protect the other entity, okay, by reducing the risk for the other entity. Default loss guarantee is saying that the entity, originating regulated entity, basically will provide the default loss guarantee, will provide the guarantee to the other entity, to the partner entity, that if the default happens by the borrower, so the compensation, a part of the compensation will be given to the partner, or a percentage of compensation will be given to the partner. Okay. So basically, the default loss guarantee can be up to 5% of the loan outstanding only. So if the default loss guarantee has been provided by the originating regulated entity is promising to the partner that, see, if the loss happens, do not worry, at least we are providing you the guarantee up to 5% of the loan outstanding. That much of the compensation we will provide you, that much of the loss we will be covering for you. Okay. So this is default loss guarantee. Remember the percentage, very important. Now, each regulated entity shall adhere to the existing requirements of reporting to the credit information companies for their share of the loan account. That means, see, the regulated entities has to inform the credit information companies. The regulated entities have to inform the credit information companies regarding the credit that is taken by the borrowers, the amount of credit taken by the borrowers from their entity. So that has to be done under the co-lending arrangement also. Asset classification norms, basically, let's say if the NBFC has said that this loan is non-performing asset and the bank is saying that this loan is good, it is a good loan. Is it fine? Or should it be done? That the bank, just to not show the NPA, the bank is saying that, okay, this loan is fine, this loan is standard loan. No, it cannot be done. So basically, asset classification norm says that the co-lending, under the co-lending arrangement, if one entity has said the loan is under the special mention account, that is, the loan is under the stress, or the loan has become the non-performing asset, so other entity also has to have the same asset classification. If one entity is saying in the co-lending arrangement, if one entity is saying that the loan is NPA, the other entity also has to give the same classification of the loan. Okay. Transfer of loan exposure. So basically, any subsequent transfer. See, what happens that the NBFC no longer wants to remain the partner because the NBFC is not able to handle the loan criteria, or the NBFC wants to close down, or let's say there is some stress that is coming in the NBFC, it no longer want to remain the partner. So the transfer of the loan exposure can happen to some other entity. So basically, let's say the bank has given 80% of the loan, the NBFC has given 20% of the loan. So NBFC can leave its position by letting some third party, some other NBFC take over its position. That is the idea. Understood? Any confusion? Now, this can happen with the permission of the bank. Okay. So any subsequent transfer of loan exposure originated under the co-lending arrangement to third party. Basically, third party is taking over the position because this party is not able to continue with its position. So the third party has taken over the position with the permission of the first party. That is the idea. Next, disclosure has to be done. So regulated entity shall also disclose on their website a list of all their co-lending arrangement partners. So if there is any problem the partner is creating, then we can identify that SBI is related to this particular NBFC. That NBFC is not good. So we can understand that, okay, SBI has come into co-lending arrangement with which entities and such. So disclosure should be clear on their website, as well as the regulated entities shall also make appropriate disclosures in their financial statements under notes to accounts. So there is like footnote, that is note to accounts, in which it has to be clearly mentioned that the details has to be mentioned, including the quantum of co-lending arrangement, the amount of co-lending arrangement, the weighted average interest rate under the co-lending arrangement, the fees charged, paid, broad sectors in which the loans are given under the co-lending arrangement. So it has to be noted under the notes to accounts. Okay. Now coming to the last slide for this particular topic, then we will discuss some small topics also. Okay. So co-lending arrangement shall entail an irrevocable commitment on the part of the partner regulated entity. Basically, if the co-lending arrangement has been signed and the partner has promised to pay 20% of the loan, so that has to be fulfilled. The partner cannot go back on its commitment. That is the idea. So this is an irrevocable commitment. If the entities have come into the arrangement, they have to fulfill their arrangement. Or if the bankruptcy is happening, that is a different case. But if you are capable of fulfilling your commitment, this is an irrevocable commitment. Okay. The co-lending arrangement shall ensure that the respective shares of regulated entities are reflected in the books. So if the partner is paying 20% of loans, that should be reflected in the books of the partner, so that it is clearly mentioned in the account details that the NBFC has given 20% of the loan. That means the NBFC has given 2 lakh rupees for a particular loan, and 80% is given by bank. So it has to be clearly written in the accounts. Okay. So if the originating regulated entity, so this is the idea, first of all, that co-lending arrangement shall ensure that the respective shares of the regulated entities, they are reflected in their books in any case not later than 15 calendar days from the date of disbursement of the loan. So once the loans have been disbursed, within 15 days, inform or like write the information in your accounts. Okay. This is not okay. Next, if the originating regulated entity is unable to transfer the share, let's say it is unable to transfer the share of exposure to the partner regulated entity within 15 days. So basically the originating regulated entity has to transfer the share of exposure to the partner regulated entity, because originating regulated entity, it was originator of the loan. So it has to transfer the share. 20% loan is given by the partner. So 20% of the share has to be transferred to the partner. So basically it has to be done within 15 calendar days. If it is not done within 15 calendar days, then the norms have to be followed. Then the different norms have to be followed for that. Okay. Next is that all the disbursements or the repayment of the loan that is happening. Let's say repayment, the borrower is repaying the loan. In which account it should go? In which account? Should it go to the bank's account or should it go to the NBFC's account? So for no fighting to happen between the two entities, it is said that all the repayments will be routed through the third party account, that is the escrow account, that is maintained with the bank. Now it can be the bank under the co-lending arrangement also, but there should be a third party account that should be maintained, or the escrow account that should be maintained. That is a separate account that is not connected with a particular entity. Got it? So all the transactions, disbursements, repayment that should happen through the escrow account maintained, it is to be maintained with the bank only, not NBFC and such. Now, REs shall implement a business continuity plan to ensure uninterrupted service to their borrowers till repayment of the loan in event of termination. Even if the co-lending arrangement is terminated because of some extreme condition that the NBFC has gone under bankruptcy, there is no third party that wants to take over the loan. So basically, if the co-lending arrangement is being terminated in case of extreme situation, then there should be business continuity plan that the regulated entity should have, so that the borrowers are not affected by this. Okay. Now all the earlier directions are being repealed and these new directions has to be followed. Okay. So the earlier directions, like I have told you, the earlier directions for the co-lending for the priority sector, they are being repealed and these new directions have to be followed now. So this is the idea. So this is the ending of the co-lending directions. We are going to do certain small directions also. I will finish this session by 9 p.m. But as I have already told you that the sessions can go up to 3 hours, and the timeline has been given according to that. You will get, I will share it with you in the session itself, first of all, and you will also get it just below your recording. So the recording will be provided of this session, right? Below that recording, the PDF will also be provided and the attachment will also be provided. See, when you see the questions, are you able to remember the statements? Yes or no? So that means you are able to understand. Okay. So if you are able to remember the statements, that means some points are getting in your mind. If you are not able to remember the statements, that means you have to revise. You have to read these again and again. Okay. So borrowers shall be charged a single blended rate. Correct. If one regulated entity classifies the borrowers as NPA, the other also has to do so. Correct. The default loss guarantee up to 5%. Yes. Earlier circulars will be repealed when the new circular is coming into force. Correct. Loan shares of each regulated entity has to be reflected in their books accounts within 15 calendar days of disbursement. So E is the incorrect statement. It is not 30, it is 15. It is 15. Okay. Now, 16 to 31st. So we have completed the first to 15th August 2025 articles. Now let's discuss some of the articles from 16 to 31st August 2025. Okay. Are you ready? Till now, any confusion anyone has? Any confusion anyone? Ma'am, in Vostro account, okay, just give me a second. In Vostro account, they have INR, but if they want to import things from other countries, so they will not be able to use Vostro account. So yes, correct, Balabi. Remember that this special rupee Vostro account, it is only for the trade transactions between the foreign country and India. So that's why if there is any surplus that is left in the special rupee Vostro account, that has to be invested in India. Kuntal, can you write your query? Otherwise, I will only be able to open your mic at the end of the session, like when the topics are finished. Got it, Balabi? Any confusion? Difference between credit enhancement and default loss? There is no basic difference. Credit enhancement basically says that, okay, we are going to protect you against the credit risk, and the default loss guarantee is providing a guarantee that if the loss happens, then we will take over your loss by this much percentage. Asset classification norms in what? Acha, asset classification norm basically says that if one entity, that is, let's say NBFC, is saying that the loan is non-performing asset, the bank also has to give the same classification. The bank cannot say that it is a standard loan. The bank cannot say it is a good loan. Okay, so both the entities should be giving the same classification to the asset. Either it is a NPA, either it is a standard loan, or it is a stressed loan under the special mention account 0, 1, or 2. Credit risk is the risk that is arising in the credit because of the stress that the borrower is facing. Maybe the borrower is facing the stress and the borrower is not able to repay the loan right now. The borrower is asking for more time. Let's say let's say I have a company, and that company is not able to do well. I know that the company will perform well. I have the projects for the coming 3-4 months, but I'm not getting paid right now. So I am asking the bank that, okay, I'm not able to get the money right now. I will get the money after 3-4 months. So after 3-4 months, I will pay. So increase my timeline. So that can be done. That can be done. Okay. And this is a credit risk that what if the loan does not come back? What if the money does not come back? What if the borrower, they default? What if they need more time and such? It was, sorry, just give me a second, okay? Yes, Kuntal, sure. Ma'am, are the loans provided by CLA secured? The both secured and unsecured. It was initially said when I was explaining the CLA, na, that the loans can be secured as well as unsecured. Here it is written, na? It is the definition given by RBI. So unsecured and secured loans both come under the CLA. Which 24 point? No, Balabi, not mentioned in the direction. Point number 24 in the last slide of CLA. Okay, last slide of CLA. Okay, point number 24. If the origin, okay. See, basically, if the originating regulated entity that is originating the loan, it is providing 80% of the loan and 20% of the loan is provided by the partner. So the originating regulated entity, let's say it has not transferred the loan exposure that is done by the NBFC within the 15-day timeline. So within the 15-day timeline, the loan exposure has to be transferred to the books. Let's say an email has to be sent and that has not been sent within 15 days. Okay, so basically the loan exposure had to be transferred to the regulated entity books, but it was not transferred by the originating regulated entity. Some delay happened. So now, because of any reason the delay has happened, now the loan shall remain on the books of the originating regulated entity. This is the punishment, that the loan will remain in the books of the originating regulated entity and can be transferred to other eligible lender only under the new provisions or only under the provisions of transfer of loan that are very lengthy provisions. Okay. So this is the idea. So basically, originating regulated entity has the responsibility to transfer the share of the loan that is given by the partner within 15 days. Within 15 days, the share of the loan has to be transferred to the books of the partner. If it is not done within 15 days, then new norms have to be followed. Okay. Irrevocable commitment means that, let's say I have promised that I will pay 20% of the loan. So I have to follow that commitment. That is irrevocable commitment. Once the arrangement has been signed, once the agreement has been signed, so that is irrevocable in nature. You have to pay 20% of the loans now because you promised that. Got it. Let's continue now. So now we are going to continue. Okay, I will take extra queries at the end of the session now in regards to how much of the coverage is required and such. Okay, so survey of foreign liabilities and assets of mutual funds 2024-25. So this article was in your RBI press release, as well as this article was in quite in news. That's why it is important. First of all, how many of you know about the mutual funds? Mutual funds, they are the funds that collect the money from the investors. The mutual funds, they collect the money from the investors, and this money is pooled in, and this money is invested in the different securities, in the shares of different companies and such. So basically, the mutual funds, they are collecting the money from the investors and they are investing that money in the different securities, in the different shares. Okay. Now, what is asset management companies? The asset management companies are the companies that are managing the mutual fund, So these are the asset management companies. So first of all, asset management companies and mutual funds are different. Let's say mutual funds have collected 1,000 crores. So asset management company, is it worth 1,000 crores? Can we say so? No. Asset management companies, let's say it is only worth 100 crores. But it is managing a mutual fund that is collecting the funds from the investors, and this mutual fund can have 1,000 crores. That is the idea. So you need to have the clear distinction between the asset management companies and the mutual funds. Asset management companies manage the mutual funds. Mutual funds are the pool of funds that are collected, the money that is collected from the investors that is invested in the securities. SEBI regulates the mutual funds. Okay. Yes. So the mutual funds come under SEBI. Now, the survey of foreign liabilities and assets of mutual funds, as well as we will discuss about the asset management companies also. So basically, Reserve Bank released the results of the 2024-25 round of the survey of foreign liabilities and assets of the mutual funds. It covered 45 Indian mutual funds and their asset management companies. So asset management companies manage the mutual funds. which held or acquired foreign assets or liabilities during 2024-25. So this is what we are going to discuss. Let's understand them one by one. So first of all, let's say in the category of bank, yes, in the category of bank, let's say they are giving loans and they are taking taking deposit. Now the loan is the asset of the bank or the deposit is the asset of the bank? The loan is the asset of the bank or the deposit? The loan. The loans are the asset of the bank. Why? Because on the loans, the bank earn interest rate. The bank earn interest rate. Now, deposit is the asset of the bank or liability of the bank? Deposit is the liability of the bank. Deposit is the liability of the bank because the bank has to return this money. The bank has the obligation to return the money. So the deposits of the bank are the liability of the bank that the bank has to pay back, that the bank has to return. So this is the idea, that the loans are the asset for the bank and the deposits are the liability for the bank. Now think from the consideration of mutual funds. The mutual funds, they are getting the money from the investors. Now this is the asset for the mutual fund or the liability. The mutual fund will have to return the money to the investors when the investors demand. So this is the liability. So the investment that the mutual fund is getting from the investors, this is the liability. This is the liability that has to be returned. Now mutual funds are investing in the shares. So this is the asset. Okay, got it? So liability, the investment that is happening in the mutual funds are getting the money. The investors, they are investing the money in the mutual funds. So that is the liability of the mutual fund. That is the liability of the mutual fund. The mutual fund will have to return the money of the investors. Now the mutual funds invest the money in the assets. This is in the securities, shares and such, that is the asset of the mutual fund. Now the foreign liabilities means the foreign investors have invested the money in the mutual fund. So that is a foreign liability. So foreign liabilities of mutual funds increased by 19.9% during 2024-25 to US $30.5 billion. Now the numbers you do not have to remember, the percentages you have to remember. Okay. So basically the foreign liabilities from the foreign investors of mutual funds increased by 19.9% during 2024-25 due to the rise in units issued to non-residents. So basically the foreign investors, they invested in the mutual fund and the liability of the mutual fund increased by 19.9%. That is the foreign liability of the mutual fund increased by 19.9%. Now the mutual funds invested the money in the assets. So overseas assets of the mutual funds have declined by 5.6%. That means the mutual funds, they invested less on the overseas shares, in the shares of foreign companies and such. Okay. So overseas asset of the mutual funds have declined by 5.6% due to lower holdings of foreign equity securities, due to lower holding of the foreign shares or foreign company shares. Okay. Got it? So the foreign investors that are investing their money in the mutual funds, this is the foreign liability that has to be returned. Okay. And the mutual fund, they invest the money in the assets like the shares of the foreign companies and such. So foreign liabilities have increased by 19.9%. Foreign assets have declined by 5.6%. That means we are investing less in the foreign companies' shares. Now, as a result, the net foreign liabilities. Now, what is net foreign liability? This is how much money we are getting. That is foreign liability. How much money the foreign mutual funds are getting, the foreign liability, minus the foreign asset, So foreign liability is 30.5 and the foreign asset is 8.3. So foreign liability that we are getting, or the investment that mutual funds are getting minus the foreign assets, so that is net foreign liability. Okay. So net foreign liability of mutual fund increased to US $22.2 billion. This has increased from the previous year. Why is it so? Because the foreign liabilities have increased and the foreign assets have decreased. Now, this is important. Okay, this is very important. Non-residents of UAE, non-residents, that is the foreign entities, we can say, the non-residents of United Arab Emirates, the United States of America, UK, and Singapore, they held the largest share in mutual fund units, both in terms of face value and market value. That means UAE, USA, Singapore, and UK, they have invested the most in the mutual funds. Okay. Next, over 95%. Now we are doing the, even though the overseas assets have decreased, but still we have done the overseas asset. So basically over 95% of the overseas equity investment or the share investment that was done in the foreign companies by the mutual funds, they were concentrated in USA, Luxembourg, and Ireland. So from where the foreign liabilities are coming? UAE, USA, UK, and Singapore. Where the foreign assets are? USA, Luxembourg, and Ireland. Over 95% of overseas equity investment has happened in USA, Luxembourg, and Ireland. Any confusion? Anyone in these points? Yep. Next is foreign liabilities of asset management companies increased by 16.8%. So foreign liabilities of asset management company has increased. So asset management companies, they get the foreign direct investment. Okay, they get the foreign direct investment from the foreign investors. Foreign direct investment, basically, the asset management companies, they are getting the huge investment for their companies and such. So asset management companies, they also get the foreign investment in their companies. Okay. So now this is the liability. If we are getting the money, we will have to return the money whenever the investors demand. Now, the asset management companies, they also invest in the assets overseas, or they are opening their branches overseas. So we are also doing investment in the other countries. Okay. So the investment that we are doing is the asset that we have. If the asset management company is opening a branch somewhere, so that is the asset that we have. Or if we are investing outside, so that is the asset. So basically, foreign liabilities of asset management companies increased by 16.8% because of the higher inward in direct investment. So basically, we have received the investment. The asset management companies have received the investment that has increased by 16.8%. Now, this is the foreign liability that we have to return. Residents in Japan, Canada, UK together accounted for over 83% of FDI among the Indian asset management companies. So highest investment that the asset management companies have got, it is from Japan, Canada, and UK. Okay. The overseas assets of asset management companies. So asset management companies have invested in the other countries. So asset management companies have invested in the other countries. They have built their assets in the other countries. This increased marginally from their previous levels. So the asset management companies' assets have increased marginally, only very little only. They were largely held, and the assets were largely held in Guernsey, Singapore, and Mauritius. Okay. Now try to answer this question. Asset management companies, they manage the asset, or they manage the mutual funds. It's not like that the mutual fund is a fund. How the money is being invested, how the money is being pooled in. So the mutual funds are being managed by some company. Now that is asset management company. Got it? Now, any confusion? Anyone? Now, so basically, as per the results of the survey, non-residents of UAE, USA, and UK and Singapore held the largest share in mutual fund units. So here the answer is Singapore. Okay. Now, introduction. Do not promise people. They do promise people that it's not like, see, if the market is going down, let's say you invested 10,000 rupees, now your value is 8,000. If you ask your money back, the mutual funds, can they say no? Can they? They cannot say no, right? They have to return your money. Okay. So that is the idea, that whenever you demand your money, if there is no lock-in period, like I have invested in some mutual funds that have no lock-in period. So I demand my money, I will get my money within the time period. Usually it takes 3 days or 1 week. Okay. If I have a lock-in period of 3 years, usually in some mutual funds, there is lock-in period of 3 years. If after 3 years, can they say that they will not give me my money back? Can they say so? No, they cannot say so. Okay. So this is the idea. Okay, do you want to do this tomorrow? Shall we just do the small ones then? There are like 2-3 articles that are very small. Let's do them. Let's do the small ones now. Okay. Okay, Himadri. Let's do the small ones. 3-4 small ones. Let's do them now. And the one big one we can do tomorrow. Okay. I have to show you the document also. So discussion paper on review of monetary policy framework. So a discussion paper has been released. Now the discussion paper is not discussed in the RBI NewsTap because you do not have to go through the whole discussion paper. But the important point is, first of all, what is monetary policy framework? So monetary policy framework, this was introduced in May 2016. The RBI Act of 1934 was amended, okay, to provide the legal basis, to provide the statutory basis for the implementation of the flexible inflation targeting. Now, what is flexible inflation targeting? It was announced that there will be flexibility that will be provided in the inflation targeting, and there will be the monetary policy committee that will have to manage the inflation target, okay. So basically, the flexible inflation targeting was introduced in India in May 2016 under the with the amendment in the RBI Act of 1934. So RBI Act of 1934 was amended in May 2016 to introduce the flexible inflation targeting. Now, in the flexible inflation targeting, the government of India, in consultation with the Reserve Bank of India, decides the inflation target. And there is some flexibility that is also provided. The current inflation target is 4%. Plus minus 2%. So there is a range that is provided. There is flexibility that is providing. So 2% is the lower tolerance limit and 6% is the upper tolerance limit. So plus 2%, minus 2%. So you can understand that the flexibility is provided that the inflation can be in between 2% to 6%. Inflation should be around 4%. So this is the flexibility. This is the range. So this is the flexibility that is provided. So now Government of India, in consultation with the Reserve Bank of India, determines the inflation targeting or inflation target. Now the Government of India reviews the inflation target every 5 years. So in every 5 years, the inflation target has to be reviewed. So as per Section 45ZA of the RBI Act of 1934, the central government shall, in consultation with the Reserve Bank of India, determine the inflation target. Government of India, in consultation with RBI, determines the inflation target, and it is reviewed every 5 years, once in every 5 years. Okay. Initially, so central government initially notified the inflation target to be around 4% within the range of plus minus 2%. And this was announced for 2016 to 2021. And it was carried forward from 2021 till 2026. Okay. That is the idea. Inflation should be 4%, should be around 4%. Now, this is the CPI inflation that we are talking about, the inflation that affects the consumers, that we also call retail inflation or the headline inflation. So CPI inflation, or the retail inflation or the headline inflation, we can say. So the inflation target is given 4% within the range of plus minus 2%. And here we are talking about the inflation that affects the consumer, that has to be controlled, that has to be kept in target. Now, accordingly, a second review of the target is now due by end March 2026. So as I've told you that the target was continued for the period of 2021 to 2026. Okay. Now the second review of the target is now due by end March 2026. In this context, a discussion paper is being placed on the RBI website. The discussion paper undertakes a review of the nature and format of the existing inflation target. When the RBI gives the decision or when the actual inflation target is changed, that will be important. But is this clear? This is just static. There is nothing current here. Basically, the static information is there. CPI combined. So basically, let me summarize. In May 2016, the RBI Act of 1934 was amended to bring the flexible inflation target. Now, inflation target is determined on the basis of CPI combined. This is the CPI that is the combined CPI for the whole of the country. So this is the CPI, this is the Consumer Price Index inflation for the whole of the country. And this inflation we want to control because this inflation affects the consumers. Okay, so CPI inflation means this is the inflation affecting the consumers. So this inflation we have to control. Okay. So inflation target, it is decided by Government of India in consultation with the Reserve Bank of India. Now this target is decided for every 5 years and it is reviewed once in every 5 years. And the current inflation target is 4% plus minus 2%. So inflation, the consumer inflation or consumer price index inflation should be around 4% within the range of plus minus 2%. Okay. Now try to answer this. Arindam, we have covered this already. Okay. Most of the articles are covered there. Now, in May 2016, RBI Act of 1934 was amended in to provide a statutory or legal basis for the implementation of flexible inflation targeting. As per Section 45 ZA of the RBI Act 1934, the central government shall, in consultation with the RBI, determine the inflation target in terms of CPI once in every 5 years. The Act mandated RBI to maintain a consumer price index inflation target 4% plus minus 2%. This was the range that was provided. So the inflation had to be maintained between 2% to 6% for the period of 2016 to 2021. Correct. So first and third are correct. Second is wrong. So the answer is C here. Next is, so these are going to be very, very small, like one slide topics. So let's just finish them in 5 minutes. Or let's do it tomorrow if you want, because 3 hours have already finished. So tomorrow we will be a little more faster. Any confusion anyone has? Let's do it tomorrow, no worries. Anyway, we have completed. Let me go to the document. Let me show you. Just a second, Kunal. I will just 1 minute. Let me open. Are you able to see the document? Are you able to see the document? Yes or no? Okay. First of all, we have completed the 1st to 15th. Sorry. So we have completed the RBI NewsTap of 1st to 15th August 2025. We have completed all these articles. Co-lending arrangements have already been done. Co-lending arrangement directions have already been done. As well as we've also started with the, okay. So co-lending arrangements also we have done. We can discuss it through the document tomorrow. So see, tomorrow, first we will revise. First we will revise through the document. So do not worry about it. The document will be seen tomorrow also. Achha, just a second. Now is it visible? Just let me see. Okay. So this is the document. I hope you are able to see it now. Okay. So we have already covered the 1st to 8th part. We have already covered this part of the document. Okay. 1st to 15th of August, this is already covered. See, we have covered all the articles here. So here you can see that all the articles have been covered. Okay. So this is done. Now tomorrow we will revise through this document. So this document will be used for revision tomorrow, and I will be asking you questions. So do come prepared. So tomorrow also we will revise through this document so that you have the clarity that, okay, your document is getting covered. Okay. Then 16 to 31st for this also we have covered the survey of foreign liabilities. We have also discussed the discussion paper on review. All the other articles we will discuss tomorrow. Okay, so that will be August part 2. Now, let me take your queries now. Yes, who was, ma'am, please share screen. No, Pari, no requirement. Okay, so Kuntal, just a second. Can you open your mic also?
Respected ma'am, can I speak in Hindi?
Yes, sure. Yes, Kuntal.
मैडम मैं जानना चाहता हूँ जो आपने को लेंडिंग की जो सब्जेक्ट हमें पढ़ा है उसमें
हम्म।
ऑनलाइन जो डिजिटल प्लेटफॉर्म है जैसे पेटीएम फोन पे, वो भी तो लोन दे रहा है, तो वो भी क्या को लेंडिंग की प्रोजेक्ट के अंडर आता है?
आ सकता है। देखो वो ना फिर एनबीएफसी की कैटेगरी में आ जाएंगे,
अच्छा।
कि नॉन बैंकिंग
अच्छा।
फाइनेंशियल कंपनीज, जो भी नॉन बैंक है, जो भी बैंक नहीं है पर वो फाइनेंशियल
हम्म।
कंपनीज है क्योंकि वो लोन दे रही हैं, तो वो नॉन बैंक फाइनेंशियल कंपनीज होगी, तो वो इस कैटेगरी में आएंगी।
और मैम नॉन बैंकिंग फिनेंस कॉरपोरेशन और एंड बैंक के बीच जो म्यूचुअल लोन लोन की जो इंटरेस्ट रेट होती है, तो उसमें प्रॉफिट क्या शेयर अनुपात भाग हो जाती है?
हाँ
एट्टी
जैसे,
परसेंट टू 20%?
हाँ देखो ये ना वैसे डॉक्यूमेंट में जो उनका अग्रीमेंट होता है ना, उसमें
हाँ।
डिसाइड होता है। अग्रीमेंट में डिसाइड होता है कि कितना परसेंटेज बटेगा, क्योंकि कई बार क्या होता है ना, एनबीएफसी में बी दे अग्री टू टेक लेस परसेंटेज, वो मान जाती है कि जैसे 20% नहीं तो 15% दे दिया उनको प्रॉफिट, या फिर मे बी ज्यादा भी दे दिया, मे बी 30%। एनबीएफसी कह रहे हैं कि जब हम कस्टमर ला रहे हैं तो हमें ज्यादा प्रॉफिट दो। तो देखो जो रिटर्न और वो एग्रीमेंट के बेसिस पर डिसाइड होगा कितना रिस्क कितना रिटर्न। ठीक है,
ओके।
वो अग्रीमेंट
ओके।
होता है ना, हर एक एंटिटी के साथ अग्रीमेंट हो रहा है, तो उस बेसिस पर डिसाइड होगा।
और मैम और मैम एएमसी जो कंपनी होते हैं, एसेट मैनेजमेंट कंपनी, वो सिर्फ प्राइवेट या फॉरेन ही होता है, या हमारे खुद का गवर्नमेंट का भी कुछ, आरबीआई का भी कुछ कंपनी रहते हैं?
नहीं नहीं, एसेट मैनेजमेंट कंपनी ज्यादातर प्राइवेट होती हैं, क्योंकि वो थोड़ा सा प्रॉफिट मोटिव के लिए काम कर रही है ना, तो फिर जो गवर्नमेंट एंटिटीज है उनको मतलब नहीं वो करना चाहिए।
ओके। और मैम एसेट मैनेजमेंट कंपनी में तो बहुत सारी फॉरेन इन्वेस्टमेंट रहता है, तो फॉरेन इन्वेस्टमेंट को रेगुलेशन आरबीआई करेगा?
नहीं, जो देखो जो म्यूचुअल फंड्स होते हैं ना उनको सेबी रेगुलेट करता है।
अच्छा अच्छा।
ठीक है।
सॉरी मैडम,
नहीं
पता
नहीं,
नहीं था।
अरे कोई नहीं, दिस इज वाई वी आर टेकिंग द सेशन ना, जो भी आपको क्वेरी है यू हैव टू आस्क दैट, एंड दैट इज गुड। ओके।
ओके मैम,
और
और एक बात, बीच में आपको डिस्टर्ब करना अच्छा नहीं लगता क्योंकि आप फ्लो में पढ़ाते हैं, तो सेशन के बाद मतलब 9 बजे के बाद आप 10 मिनट का एक क्वेश्चन क्वेश्चन एंड आंसर का एक सेशन रखेंगे, जैसे हम अनम्यूट करके बात कर सकते हैं, ऐसा एक सेशन रखेंगे तो बहुत अच्छा होगा। हम नोट पैड में राइट डाउन करके रखेंगे, आफ्टर 9 9 PM वी कैन आस्क।
देखो अगर तुम 9:30 10 बजे तक भी मुझसे क्वेरी पूछोगे मैं तभी भी यहीं बैठी रहूंगी, तो उसकी तो तुम टेंशन मत लो, क्योंकि देखो
ओके।
हमारा काम है टू टेक योर क्वेरीज एंड वी आर हेयर फॉर यू। सो डू नॉट वरी अबाउट दैट, अगर आप मेरे से 10 बजे तक भी क्वेरीज पूछोगे तो मैं तभी भी आपके लिए यहाँ पर होंगी, तो उसके लिए डोंट वरी अबाउट दैट। 10 मिनट तो बहुत कम होता है, क्योंकि ऑफकोर्स यू विल हैव बहुत ही कॉम्प्लिकेटेड डॉक्यूमेंट है, तो आपकी क्वेरीज होंगी, तो आई एम हेयर फॉर यू,
नहीं
डू
मैडम,
नॉट वरी
आपका
अबाउट
पढ़ाना
दैट।
बहुत अच्छा लगा, और जो मिडिल में क्वेश्चन करके मुझे भी प्रॉब्लम हो रहा था क्योंकि मुझे आंसर नहीं मिल रहा था और आपका फ्लो नष्ट हो रहा था।
हम्म।
थैंक यू मैम, बहुत अच्छा लगा ये सेशन।
थैंक यू सो मच, मीन्स अ लॉट। थैंक यू कुंतल,
थैंक यू
थैंक यू
मैम,
सो मच।
अनम्यूट कर रहा हूँ मैं, म्यूट कर रहा हूँ मैम। लीव कर सकते हो अभी, मेरा पढ़ा
हाँ,
हो गया।
अगर आपका होगी क्वेरीज यू कैन लीव। ओके,
ओके मैम।
just give me 1 minute, okay? Before opening the mic, I have to see something. Okay. Yes, Harshal. Can you open your camera if possible? If not possible, that is also fine. But it will be like better.
एक्चुअली मेरा कैमरा बहुत खराब है मैं
कोई नहीं visible. Yes, yes, Harshal.
हेलो मैम, गुड इवनिंग
Yes, good
मैम। बस
evening.
यही पूछना था कि हम क्या अब अप्रैल और मई का भी हम कवर करने वाला है, बिकॉज
देखो,
अप्रैल तो बहुत पीछे चले गए।
हम मई से करेंगे, अप्रैल का रहने दो।
मई
मई
से।
जून अभी ना ऐसा होगा कि पहले अगस्त का कल पार्ट 2 होगा, फिर हम जुलाई का करेंगे, फिर हम मई और जून का एक ही दिन में करेंगे, तो मई के भी हम बहुत ही इंपॉर्टेंट जो कंपोनेंट होंगे ना उनको पिक करेंगे। ठीक है, तो मतलब फोकस जो आता सितंबर अगस्त जुलाई में होना चाहिए, फिर मई और जून, मतलब जून में भी होना चाहिए, फिर मई थोड़ा सा लास्ट में आता है। और हमेशा ना देखो फोकस रखो कि अभी वाला करने का, क्योंकि रिसेंट 3 मंथ से सबसे ज्यादा आते हैं, फिर उसके आगे 1 2 महीने और करना होता है क्योंकि उससे भी क्वेश्चंस आते हैं। ठीक है।
एक बस वो मई में एक वो डिजिटल लेंडिंग वाला था, वो बहुत बड़ा था वो
वो करेंगे, हम
मई में।
करेंगे। यस।
एंड हाँ मैम, आपने एक बोला था लाइव क्लास में कि जो स्कीम्स है आरबीआई वाले, वो
हम्म।
चाहे 2 साल पहले आए, हमें तब भी वो करना है।
हाँ
तो
हाँ,
वो
करेक्ट।
भी कवर हो जाएंगे नहीं इसमें, क्योंकि आरबीआई टैप में
देखो,
मुझे एग्जैक्टली कहाँ पे है वो मुझे पता नहीं है।
आपकी स्कीम्स ना वो गुरुकिरत से लेंगे स्कीम्स टैब में, वो थोड़ा सा
ओके
मतलब क्योंकि वो स्कीम्स हैं तो वो स्कीम्स डॉक्यूमेंट में कवर हो रहा है, तो वो सर लेंगे गुरुकिरत सर।
ओके
वो हो जाएंगे
ओके मैम।
कवर पर, आप टेंशन मत लो। ठीक है।
ओके मैम,
और कोई
थैंक यू।
कंफ्यूजन हर्षल?
नो नो, थैंक
और कैसा था सेशन, सब समझ आया, कुछ प्रॉब्लम हुआ?
यू। हाँ हाँ, इनफैक्ट मेरा ये सेकंड रिवीजन था तो मुझे और अच्छा लगा।
चलो ठीक है, वेल डन।
यस।
ओके देन,
थैंक यू मैम।
हैव अ गुड डे। ओके।
थैंक
Yes, Utkarsh. I'm seeing everyone in line. Okay, in that manner, I am picking the students, and I will not be able to see the queries right now. So do ask your query through asking. Yes, Utkarsh.
Good
Hello.
evening, ma'am.
Good evening. Yes.
Ma'am, first of all, I want to ask how do we revise
Hmm.
whatever we have learned? How do we revise that? And second is that are these enough? All the material that you have given, is that enough, or do we have read and do we have to read anything else?
No, no. Everything that we are providing is enough. Okay, because the material has been picked from the document. So do not worry about, just go through the PPT, PDF that I will be providing you. Okay, I forgot that. Just, okay, I will take your query first. So I will be providing you the PDF of the PPT in the session itself. I have to provide that, as well as you have the document. Go through that,
Right.
give the quiz. That is for your revision. Documents are there, as well as, see, I repeat the things a lot of times so that you get that in your brain, because when you hear and you listen to the things, you get the things fixed in your brain to some extent, and then you hear the voice in the examination that, okay, there was something that she said or that was said. So
Right.
that's why the first revision or the discussion is happening in the session. The revision is also happening in the session through the MCQs. After that, you have to, like, after the session, by tomorrow morning, just give the document a read. And tomorrow again, we will be revising the topics that we have done today through the document itself. And you have to give the quiz that is there in the after the document. There are the quiz also that is given. Okay, so you
So
have
do
to
we
do
have
the
to
quiz.
give the quiz tomorrow in the morning or once the class is
I
over
will
tomorrow night
I will suggest you that after 2 days.
or for 2 days?
Yes,
All
because
right.
see, right now everything is fresh. Right now, though, you will mark the answers very nicely. But what happens after 2 days? Are you able to recall? Are you able to remember? So quizzes should be given after like 2 to 3 days, so that you have that clarity that do you recall the things or not. Okay.
All right.
Hmm. Any other question, Utkarsh?
Nothing, ma'am. Thank you so
Okay.
much.
Oh, and the session, was it understandable?
Absolutely, ma'am. Absolutely.
Thank you so much. Okay
Thank
then.
you.
Thank you for joining. Okay. Any other query anyone has? Bharat. Okay. Bharat, is it possible for you to open the camera? If it is not possible, again, it is fine. But if it is possible, then kindly do so. Okay, thank you. Thank you for.
Thank you very much for this session.
You're most
Ma'am,
welcome. Thank you so much.
I had two doubts, ma'am. That will you please cover the economic survey, budget, RBI reports in this crash course?
Yes, they will be covered. So you do not have to worry about that. For RBI reports, if you have seen the schedule, we have provided one class for RBI reports, so annual report and your FSR and such. These reports will be covered in the RBI report session. Okay, as well as economic survey will be taken and union budget will be taken by Gurukul sir. For that also we have provided you 1 or 2 sessions, I guess. Okay.
And ma'am, can we expect descriptive questions from the RBI notifications, or we have to
See,
study with?
okay. So in 2023, there were descriptive questions from the RBI notifications as well as finance current affairs. Like ONDC, a question was on ONDC from finance current affairs, and a question was on pre-sanctioned credit line from the RBI press release. So yes, we can expect in 2024, there was no question from RBI notification or finance current affair, but in 2023, there were questions. So yes, we can expect it. That's why we are discussing the things in detail here. Okay.
Okay. Thank you so much, ma'am. Thank you so much.
Most welcome, Bharat. Thank you so much for joining. Yes, Vivek. Again, if you can open your camera, if possible.
Sorry.
Yes, Vivek.
Am I audible?
Yes, you are audible. Can you open the camera?
Sorry, ma'am, I can't.
Okay, no problem at all. Yes.
Do we have to focus on October current affairs also? First 10 days?
Sorry, can you repeat?
अक्टूबर के करंट अफेयर पर भी फोकस
October.
करना है. Yes, ma'am.
Okay. October, you mean the okay. Yes, you have
First
to
to
cover
10th.
the 1st to 10th. पहले से 10 तारीख तक, मतलब 1st to 10th अक्टूबर तक जितने भी करंट अफेयर्स होंगे वो करने होंगे, क्योंकि ना लास्ट ईयर हमने नोटिस किया था कि एक हफ्ते पहले तक के करंट अफेयर्स पर भी क्वेश्चन आ रखे थे, एक या मतलब एक हफ्ता
Okay,
या 10 दिन पहले के। तो हम 1st to 10th अक्टूबर के लिए भी हमने सेशंस रखे हुए हैं, तो उसके लिए आप टेंशन मत लो, पर वो करना है।
okay, मैम एक और डाउट था. All 80 questions are from current affairs.
देखो पिछली बारी 17 क्वेश्चन जीए से थे, 7 क्वेश्चन स्कीम से थे, 8 क्वेश्चन आरबीआई नोटिफिकेशन से थे, 9 क्वेश्चन फाइनेंस करंट अफेयर्स से थे, कुछ क्वेश्चन ईएसआई करंट अफेयर्स से भी आई गेस 8 to 9 क्वेश्चन थे, और रिपोर्ट से काफी सारे थे। ठीक है, तो मतलब इस तरह से बाइफर्केशन था। सो सबसे ज्यादा क्वेश्चन थे रिपोर्ट से, आरबीआई नोटिफिकेशन, फाइनेंस करंट अफेयर्स और जीए, ऐसे सेक्शन में था। तो मतलब सारे जो अलग अलग, हाँ मतलब करंट अफेयर्स से क्वेश्चन होते हैं और अलग अलग डोमेन से होते हैं। ठीक है,
स्टेट पार्ट कुछ भी नहीं होता उसमें.
स्टैटिक के देखो एक आध क्वेश्चन आ सकता है, पर ऐसा कुछ नहीं है कि मतलब स्टैटिक से ही आएगा। अगर फाइनेंस स्टैटिक से एक आध क्वेश्चन आ सकता है, पर ज्यादातर करंट अफेयर्स, लाइक अगर 80 में से हम देखें तो 75+ क्वेश्चन करंट अफेयर्स के होंगे।
ओके मैम.
और अगर
और
स्टैटिक से कोई क्वेश्चन, स्टैटिक से वैसे आते नहीं है उतने डायरेक्ट, मतलब प्रॉपर स्टैटिक से क्वेश्चन उतने नहीं होते, 2 या 3 उतने आ सकते हैं।
ओके मैम. मैम जो आप लोगों ने अभी फुल लेंथ टेस्ट अपलोड किया हुआ है ऐप पे कोर्स में, उसमें करंट अफेयर कौन से मंथ के कवर किए हो आपने? वो पुराने डले हुए हैं ना काफी.
यार विवेक, इस चीज में मुझे टीम से पूछना पड़ेगा, क्योंकि जो क्वेश्चंस डालते हैं वो बैक एंड टीम है, तो मुझे थोड़ा सा डिस्कस करूंगी, पर आई विल रिमेंबर दिस पॉइंट। लेट मी राइट इट डाउन। ओके, लेट मी राइट इट डाउन। ओके, सो आई हैव टू आस्क फॉर द फुल लेंथ टेस्ट ना।
यस मैम.
चलो ठीक है, आपका कोर्स कौन सा कोर्स है, एक बार ही बता दोगे आप?
गोल्ड पैकेज आई थिंक, फेज 1
गोल्ड।
प्लस फेज 2.
ठीक है, गोल्ड।
यस.
गोल्ड फुल लेंथ टेस्ट कौन से महीने के गए हैं, ये मैं कल आपको वो कंफर्म करके बताती हूँ। टेस्ट।
ओके मैम.
और आज सेशन में समझ आया?
यस मैम, इट वाज नाइस.
ओके, थैंक
मतलब करंट अफेयर पहली बार इतना सही लगा. इट वाज.
यू।
थैंक
ओके
यू.
चलो, थैंक यू सो मच। और अभी ना पहली क्लास है तो थोड़ा सा प्रॉब्लम हो सकती है किसी को, पर जैसे जैसे हम आगे जाएंगे ना तो थोड़ा और क्लैरिटी बनेगा, क्योंकि वो होता है ना कि अलग अलग टीचर्स का अलग अलग तरीका होता है, तो तुम्हें ज्यादा मजा आएगा, और जब हम रिवाइज करेंगे फिर से तो और ज्यादा बेटर तरीके से समझ आएंगी चीजें। ओके,
ओके. थैंक यू.
ठीक।
गुड नाइट.
गुड नाइट। ओके, यस महेश।
Good evening,
यस,
ma'am.
गुड इवनिंग, गुड इवनिंग।
Ma'am, in the topic of survey of foreign liabilities, there was a point about 95% something.
ओवरसीज,
Uh,
यस।
so when you were teaching, actually, I had kept the PDF open. That is not there in the PDF, ma'am. So can you please keep that
Yes,
slide again so
that
that
is
we can
a
note it down?
that is the additional point that I have brought for you, and you will
Okay.
get the PDF of the PPT. Let me share it first. Again, I will forget otherwise. Okay, let me share the PDF. So that's why, see, some additional, like there are not much additional points, but yes, there are 1 or 2 additional points that I have brought in the PPT. So I'm providing you the PDF of that PPT. And the students that have left the session, they will also get the PDF in the course itself. Okay, so you don't have to worry about that. Just let me share. Any other question you have?
Ma'am, regarding current affairs, I have a background of civil services.
Hmm.
I have recently switched over to the RBI preparation, so it is completely opposite there. We are not concerned about facts, but here it is fully on facts.
Correct.
Ma'am, today it feels fresh. Whatever you have told, the repo rate, and then SDF, MSF, all that, it is fresh. But there are other aspects, also facts, which we have to remember. How do we revise and how do we go forward about it, ma'am?
It all comes down to recall period now. See what you have listened today, you have understood, or whatever, like till 90% you have understood.
Yes, ma'am.
Tomorrow you will go through the document before, as well as tomorrow we will revise the document again. So that will be your second and third recall. Then after 2 days, I have asked you to give the quiz. That will be your third recall period. In the third recall period, in the quiz, you will understand that how much you are able to understand, how much you are able to recall. Let's say you are only able to recall 50%. Fine. At least 50% you are sure about, 50% you are like not able to recall. In each quiz, there is also the explanation that is given. So go through the explanation. Again, go through the document that why was I not able to remember this. That will be your fourth revision. So in the sessions itself, you are getting 2 revision. Then you have to do 1 revision yourself. Then you have to do 1 revision when you give the quiz. So after the 4 revisions, you will recognize that, okay, your subconscious mind is able to remember. बिकॉज अभी अगर मेरे से डेटा पूछा जाए, मैंने जो 1 महीना पहले पढ़ाया था वो भी कुछ लाइक समथिंग आई विल एबल टू रिमेम्बर, राइट? सॉरी if I spoke in Hindi, you understood, right?
Yes, ma'am, I can understand.
Okay. So I hope you are able to understand that in the RBI, see, the coverage that you are doing of the months is less important as comparison to the revision that you are doing here. Even if you are doing 3 months, that has to be done in a very solid manner, because if I have done 3 months, I'm not able to recall in the examination, it is not worth it. So even if you are doing 3 months, even if you are doing 4 months, remember to revise again and again and again. Then only you will be able to remember facts. It is understandable. RBI domain or the regulatory body's whole examination is all based on facts. So recall is everything, or revision is everything here. More than coverage, revision is the thing. Okay.
Ma'am, and with regard to few topics, like there were few topics which were hardly half a page, quite crisp, and it was easily understandable. And then there was a topic about co-lending, and I just glanced through the document. There are many more such topics which go over for 5 to 6 pages. So initial part, ma'am, it seems to be important, and then it is bit advanced in the later pages. So do we focus? We have to focus on the entire part or just the initial part?
See, for the phase 1, what you can do, focus on the facts only. Okay.
Okay.
When tomorrow we will do the revision, then I will tell you that which facts you have to focus on. That's why we have kept revision also. I will tell you that these are the facts for the phase 1. But in the phase 2, sometimes the big notifications have to be covered from the phase 2 perspective, because they ask the statement based question, or they can ask the descriptive question and such. So that's why we teach those lengthy documents or those lengthy articles also, so that your coverage is being done from the phase 2 perspective also. For phase 1, I will provide you the data that, okay, the facts, just see 5%, 10%, 10 years, 5 years. This is the idea that you need from the phase 1. The statement based question that comes in the phase 1, they are not very complicated to handle if you know the basic idea. But for phase 2, yes, you have to do more in depth.
Okay. Thank you, ma'am.
Okay. And Mahesh, all good? Like in the session, did you face any problem?
No, ma'am. It was great. It was a great engaging session.
Okay. Thank you so much, Mahesh. Thank you for joining.
Thank you, ma'am.
Okay. Yes. Manish. Yes,
हेलो
Manish.
मैम,
Hello. Yes.
लास्ट सेशन हमारा दिसंबर में हुआ था, तो उसके बाद आज मिल रहे हैं, सो इट्स वेरी रिफ्रेशिंग।
Thank you so much.
मैम, मुझे कोई डाउट्स वैसे तो है नहीं। आई जस्ट हैड वन रिक्वेस्ट, हम्बल रिक्वेस्ट। एक मास्टर डायरेक्शन है जो नॉन फंड बेस्ड नॉन फंड क्रेडिट का जो डायरेक्शन है आरबीआई का, दैट आई थिंक इज देयर इन द सेकंड रिपोर्ट
Second.
ऑफ अगस्त। तो आप प्लीज कल हिंदी में एक्सप्लेन कर देना वो, बस इतना ही रिक्वेस्ट था।
देखो, ऐसा करेंगे कि एक्सप्लेनेशन तो होगा इंग्लिश में, लेकिन मैं लास्ट में 2 या 3 मिनट की क्रिस्प समरी दे दूंगी, ताकि आपको एक ओवरऑल अंडरस्टैंडिंग मिल जाए। ठीक है? क्योंकि एक्सप्लेनेशन ना हिंदी में हम कर नहीं सकते, क्योंकि जब हम कोर्स, वी प्रोवाइड द कोर्स, देन वी इन्फॉर्म द स्टूडेंट्स कि इंग्लिश में ही मटेरियल होगा। अब मैं अगर लैंग्वेज चेंज करूंगी तो मेल्स आने लग जाएंगे कि मतलब चेंज हो रही है लैंग्वेज, एज लाइक इन कॉन्ट्रास्ट टू व्हाट वी प्रॉमिस्ड। सो मतलब मैं इंग्लिश हिंदी में तो नहीं पढ़ा सकती पूरा ही, पर हाँ लास्ट में मेरे को रिमाइंड करना, उसी समय कमेंट में कर देना 1-2 बारी, ताकि मुझे दिख जाए। फिर मैं वो बता दूंगी आपको कि 2 या 3 मिनट की क्रिस्प समरी दे दूंगी मैं हिंदी में, या फिर एंड में आप ऐसे कर भी पूछ सकते हो क्वेरी।
Okay, ma'am. Actually, I think you had taken one session on YouTube regarding this, so usko I had gone through, but few facts and few concepts that were there
बहुत
was not
मुश्किल है
clear to
वो,
me.
आई कैन अंडरस्टैंड, बहुत मुश्किल है वो डायरेक्शन। तो कल हम उसको थोड़ा सा और ब्रेक डाउन करेंगे, और कल मैं थोड़ा सा हिंदी में भी आपको बेसिक समझा दूंगी। ठीक है?
Okay, ma'am. I'm और एक चीज मैम, since I'm working, so maybe I might not be available tomorrow. मतलब मैं लकीली लाइव लेक्चर अटेंड कर पाता हूँ, तो इट्स अ हम्बल रिक्वेस्ट, अगर आप बीच में I'll do watch the recording session, बट अगर आप 2 मिनट का अगर आप हिंदी में कर दो
ठीक है, डन,
तो
मैं याद रखूंगी। वैसे मेरे को थोड़ा
ठीक
प्रॉब्लम होता है क्योंकि मतलब
है।
एकदम से जब फ्लो में चल रहे हो तो भूल जाते हैं, पर मैं कहीं स्लाइड में ही लिख लूंगी कि इसको हिंदी में वो करना है क्वेश्चन के बाद, तो वो आई विल कीप इन माइंड, मैं लिख देती हूँ कहीं।
ओके
Okay,
मैम।
and Manish, was like everything good in today's session? Any problem that you faced?
आई थिंक मैम राइट फ्रॉम द स्टार्ट इट वाज एब्सोल्युटली गुड, सो
अच्छा, थैंक यू।
नथिंग टू
मुझे लगा
पिनपॉइंट
स्टार्टिंग में,
एनीथिंग।
क्योंकि देखो जब हम अब मैं जैसे एसडीएफ वगैरह समझा रही हूँ तो मुझे ऐसा लगा कि मैं ज्यादा ना एक्सप्लेन कर दूं क्योंकि टाइम बहुत लिमिटेड है। पर आई होप कि सब समझ आ रहा हो, और फिर भी अगर
हाँ
किसी को
हाँ।
कोई प्रॉब्लम होगी तो ऑलवेज राइट इन द कमेंट, एंड आई एम ऑलवेज वॉचिंग योर कमेंट्स। कभी फास्ट जाना है, स्लो जाना है तो मुझे बता दिया करो। तो आई
ओके
विल
मैम।
बी ट्राइंग टू cater टू योर नीड्स। ओके।
या
ओके मनीष।
थैंक यू सो मच मैम, थैंक यू।
ओके। ओके Vashnu, I'm sorry if I'm like taking your name incorrectly. If you can open your camera. Are you like I have asked you to unmute? Uh, okay. Am I audible to you? Okay. Let's move forward with the next student. Yes, Balabi. Can you open your mic? Sorry, camera, if possible.
Sorry, ma'am, I can't
Yes, Mahesh,
now.
if you're just a second, huh? If all your doubts are cleared, you can leave the session. Students, if your doubt is left, then you stay in the session, okay? Yes, Balabi. And sorry, if I'm pronouncing your name incorrectly, do tell me your name also, okay?
Ma'am, I'm Ballavi.
Pallavi,
So
okay.
it's fine. You can call me and with any pronunciation. So, ma'am, first of all, thank you so much. मतलब कि like मेरे क्वेश्चन बड़ा illogical type में होते हैं, but you like answered very perfectly, and like I'm very like happy type na from your response. From starting, like I purchased the EduTap course as a gold course. Starting, we are connected with each other, and I feel very good and sweet type. So, मैम बस यही बोलना था एक्चुअली। और
Thank you.
मैम एक ये था कि रिवाइज कैसे करें, लाइक आज तक हमें मिला है उसको मल्टीपल रिवीजन, लाइक कितने कितने डेज में या कितना 1 वीक में करें या फिर किस तरीके से रिवाइज।
ठीक है। तो थैंक यू सो मच फॉर योर काइंड वर्ड्स फर्स्ट ऑफ ऑल, बल्लभी। एंड सी रिवीजन, एज आई सेड टू महेश आई गेस और उत्कर्ष, कि देखो रिवीजन के लिए पहले तो अभी थोड़ा सा कल सुबह एक बारी डॉक्यूमेंट देख लेना, गो थ्रू द डॉक्यूमेंट वंस टुमारो, एंड आफ्टर दैट आफ्टर 2 days गिव द क्विज, then revise again. After that, at the end of the week, then revise again. Okay. And the recent months, the 3 months have to be revised again and again. So try to revise them every week. Just go through the document, just go through the material once. Okay. So on every Sunday, try to revise all the documents like on the monthly basis, that this Sunday I will do August all documents, next Sunday I will do July all documents. So in this way you will have multiple revisions. So this is how. So first, right now, tomorrow only revise. In the session also we will revise, then tomorrow you can also like after 2 days quiz, then on Sunday revision, and every Sunday then your revision will be there. So that is how you can revise. Okay. Okay, let me shift to next student. Sorry. Yes.
Hello, ma'am.
Hello. Can you open
Audible?
your camera? Yes. Hello.
Actually, ma'am, there are so many sections and act in that. So do we have to remember all of that?
No, no, no. No need to remember sections and the acts. These are just for your understanding that, okay, the RBI gets its power from these acts. That's it. Okay.
Okay, but if in the question, if in the question there are statement based, so if in the section 45 ZA example.
Acha, that section, if it is in the material, see, if the section is
Yeah.
regarding that is section 1, 2 of this particular act is giving the power to the RBI, that is different. If we are talking about the power to the RBI to make the act, that is different. But if it is regarding the Monetary Policy Committee, then you have to remember the section, but it will not be much. It will be only 1 or 2 sections that you have to keep in mind. And specifically the sections from the Monetary Policy Committee is important. Other sections are not very important. Okay.
Okay, thank you, ma'am.
Okay. And the session, was it fine for you?
It was fine, yeah.
Okay. Thank you so much
Thank
for
you, ma'am.
joining.
Yeah, thank you.
Yes, Raghav.
Hello, ma'am.
Hello, Raghav. Yes. Can you
Thank
share
you so
your
much for the
camera?
session. Yes, just a moment. Yes, thank you so much for your session, ma'am. Really
Thank you so
appreciate
much.
it. Yes, ma'am, I just had a generic doubt, nothing specific. So by co-lending, I tried to Google, I didn't get the answer. By co-lending, it means that one NBFC and one bank amalgamate and they give loan. That's am I right on this?
Yes. Can you give me just 1 second? Just 1 second.
Yeah, sure, no worries.
So sorry. Yes, Raghav.
No worries, ma'am. Yeah. So, so when the term co-lending, the term co-lending, is it only for a new loan when both the banks amalgamate and give, or is it also for the takeover loans, like a refinance loan from other banks? Just a curious doubt, ma'am. This is nothing to do with. I tried googling, I didn't get the answer, so I thought I'll just ask in the session.
See, in the directions, it is not mentioned.
Yeah, in the
And
directions,
if,
it's not mentioned. Yeah,
and if we talk about co-lending, I think it will be for refinancing also. Because
refinancing also is included.
yes,
Okay.
because if the two entities are coming together to take over some loan, so then also the loan is being given, na? So
Correct.
a party
Correct.
will give maybe 80%, the other party will give 20%.
Correct.
So it
Correct.
depends on the agreement also, the co-lending arrangement agreement, when the agreement is being signed. So it will be